The CEO of UniCredit giving it the hard sell in the German media, talking to Handelsblatt, saying that they will be an active Commerzbank shareholder. It's important that they get both of these banks combined, he said. We'll also watch Nestlé on the back of that unusual downgrade we've seen from Morgan Stanley, Guy.
Yeah, we'll keep an eye and see how that one trades through into the Swiss market this morning. Here we go, time for the opening trade this Monday morning. Let's show you some numbers. We're expecting a little bit of weakness, but not much. So that's what we're getting first up from the FTSE 100, as you can see. A little bit of red on the screen, down by 0.1% first thing this morning. We'll dive into the details in just a moment. The IBEX is down similar amounts, 0.2%. Stock 600 down by 0.2%. These are not dramatic moves, certainly at an index level. We'll keep an eye on what's happening with the German market this morning. That Rexel story, I think, fascinating in the French market as well this morning. The SMI, obviously, Nestlé is a heavyweight on that market, so we'll see what the Morgan Stanley downgrade does to that market as well. But the early indications are that we are a little bit soft. The CAC opening down, now down by 0.4%. London down by 0.3%. Similar story, I would argue, in terms of the numbers. Feels like a wait-and-see market this Monday morning.
Yeah, it does. And interesting to look at where we are on the sector picture then, Guy. We are kind of the opposite of what we saw on Friday. On Friday, most sectors were in positive territory, and we were led higher by those retail names. Zalando in particular was doing really well. Bring you right up to date, and today we have nearly all sectors in negative territory. The only one that seems to be doing okay is utilities, and we are being led to the downside by technology, but also basic resources. And given we are light on players over in the Asian session, Guy, you wonder whether this has a lot to do with the weakness in the Chinese data that we got coming through at the weekend. Of course, factory output, consumption, investment, all came in below expectations. And basic resource stocks then taking that pretty seriously this morning, it seems, down by 0.6%. Even though looking through the Asia session, we didn't have, you know, the commodities themselves weren't particularly weak. We were down 1% on iron ore, I guess, through the Asia session. But as I say, lots of people not working over in Asia today because Japan is closed, China is, mainland China at least, is closed.
And we're dealing with a typhoon as well, which
yes,
we need to factor in too.
Into Shanghai, yes, absolutely.
AstraZeneca bouncing back, it's up by 0.6% this morning. In terms of this is where the weight is coming through in Europe this morning. Novo's up, LVMH is tracking higher as well. As you can see, in terms of the stock 600, stocks 50 actually, you've got AstraZeneca leading the story. LVMH is in there as well. Downside, that Nestlé downgrade is appearing to have quite a significant impact. And the miners, as anticipated, maybe on the back of that Chinese data, is where we're also seeing some weakness. So you can see some of the oil names are also softening up as well. Rolls-Royce is soft, so I think that's interesting in the light of what we're seeing at Boeing, the ongoing strike there. Obviously, a big provider into the wide-body market when it comes to engines. So the picture this morning, is there a clear, discernible difference? LVMH is up on the back of weak China data, but it's not really a consumer data series that we're watching. So maybe we can sort of park that one and take it out of the LVMH story. I think it feels like wait and see.
Yeah, it does feel like wait and see. As you said, there's a lot of central bank decisions coming this week. We're also waiting to see what happens with Rexel at the start of the trading day. That one is halted, so we don't have an opening price there. It takes a little time sometimes on the back of these M&A stories to try and get an opening price. But they rejected a takeover offer, saying it undervalues the business. We'll watch for movement on that one.
We'll come back to the macro, though, while we wait and see exactly how that stock trades. It's going to be a busy week. It's a busy week, certainly, for central banks. I should say, not just one. We're not just focusing on the Fed. There are other central banks out there that you can choose from. Our next guest sees the Fed going for 25 this week. The BOE waiting until November. The BOJ, not going to see a hike there until January. Wei Li, BlackRock's Global Chief Investment Strategist, joining us around the table. 25 from the Fed. Why? Why not 50?
Well, if you look at the big picture, U.S. economy is doing okay.
Yep.
The Fed's on nowcast for GDP Q3 is tracking at 2.5% annualized. You look at the job market, the last 6 months, we're talking about averaging 164K monthly job creation. This is still pretty robust pace. You look at inflation, it's fallen down a lot, but at the same time, there are pockets of inflation that show some persistency. So when you bring all of this together, it warrants a cut for sure, the cutting cycle starting, but maybe not as deep as markets seem to be pricing.
Yep.
We're talking about 100 basis points, more than 100 basis points of cuts for this year, and more than 250 basis point cuts until the end of next year. That's way over the top.
So am I selling treasuries going into this and buying the dollar?
Well, at this juncture, actually last week, we downgraded U.S. front end from overweight to underweight for this very reason, because we think markets are a bit excessive in pricing the depth of the rate cut cycle. But we still like the value of the curve because we think that income is attractive, but more of a relative value curve play at this point.
Wei Li, good morning. So if you think that markets are too aggressively pricing rate cuts and yields have come down a little too far, what do you think the market's response will be if we only get, in inverted commas, a 25 basis point cut then? Do you think the markets will be disappointed with that, given the conversations that have happened in recent weeks?
Well, we have seen significant wild swings in rate pricing, right? So after the CPI print last week that surprised marginally to the upside, markets were pretty much talking about 25 basis point as a base case, and then the pricing for 50 basis point accelerated into the weekend. I would say that if we were to get just 25 basis point of cuts, bond markets could be quite volatile because of the wild pricing that we have seen already. But equity market, if you look at the bigger picture of growth, you look at the bigger picture of earnings, the Q2 earnings season actually saw all sectors beating expectations. When you have that backdrop, actually equities could still hold up okay, especially because the latest rhetoric around maybe 50 basis point was not purely based on recession fears.
And so if we got 50, would risk assets be spooked, do you think? That seemed to be the question we were asking a lot a couple of weeks ago, and then a few people pushing back just recently saying, no, the market might take that in its stride.
Okay, there are two reasons for us getting 50 basis points and for our call of 25 basis points this week to be wrong. The first is if the Fed decides to front load the Fed cuts, the cutting cycle. You start with 50 so that you don't have to kind of be on the back foot to react to weaker data, especially in the middle of election. You don't want to accelerate the pace. So that could be why they want to front load the cuts, but they may not want to kind of go ahead with the depth of rate cuts being priced in, and that's possible. Another kind of way for the Fed to start 50 basis point is if they see something that we don't know. But our assessment, and I think the SEP is going to be very, very important to pay attention to as well, is that growth is slowing down, but we're not talking about recession. And that being the case, hopefully markets are not going to overreact whatever they do on Wednesday.
Chinese data is super weak. The US economy has been very strong. Chinese data is still super weak. The US economy is beginning to slow down. What does that tell us about the aggregate picture for the global economy right now, and how we should think about the recession risk that is posed by it?
I think recession risks have increased, but the base case is still slowdown rather than recession. To my earlier point about kind of just looking at the U.S. economy standalone, things are slowing down. Consumer sentiment is cooling somewhat, but we're still talking about pretty robust kind of growth levels that both our models are tracking as well as external nowcasting models are tracking. So growth is okay in the U.S., slowing down. Chinese growth is indeed very weak. We have seen piecemeal policy support coming through.
Yep.
We have seen rate cuts, government bond issuance, increasing local government support kind of being talked about. But we're talking about measures to kind of minimize the damage rather than measures to really kind of be the bazooka that some optimists were hoping for. So as a result of that, we have not favored Chinese assets, even though valuation is very attractive. We're talking about 40% discount to their U.S. Counterparts. We haven't jumped into the market for that reason, because we haven't seen the bazooka that is needed to turn things around. And in fact, given the structural kind of constraints and headwinds facing Chinese economy, such as aging population and the need for reform, we're talking about by the end of the decade, Chinese economy growth having a 3 handle, which is not much higher than many developed market economies, which is why we prefer developed market over emerging market at this juncture for our asset allocation.
There's a lot of unknowns at the moment. What's happening with politics, what's happening with the economy, what's happening with the Chinese response. Is the case for cash getting bigger at the moment?
Well, the case for cash has been bigger versus when yields were close to zero.
Sure.
So definitely we have seen significant inflows into money market funds, for example. But at the same time, we're talking about a period of potentially unprecedented transformations happening around us. When you add up the amount of capex that is needed for AI build-out, for the low-carbon transition.
What's going to outperform cash at 5% at the moment?
What's going to outperform cash? We still like equities. You know, we like U.S. equities. We're overweight U.S. equities. We have been overweight U.S. tech, the AI theme. We see that theme broadening out. We see sectors like utilities, industrials, energy for that matter, really benefiting from the broadening out of the AI build-out theme. So we're broadening out the tech concentrated core into the broader U.S. equity market. And if we're talking about rate cuts starting and potentially the pace being faster as the Fed wanting to front load the cycle, which is not our view, but there is possibility of that happening, and economies holding up, I think equities can do okay. And credit, you look at credit, they have been holding up reasonably well, right? You look at the credit spread, we're still at multi-year lows. And yes, yields are coming down because rates are coming down, but from a kind of a building portfolio balanced perspective, barbelling equity with quality credit with belly of the curve is still a good way to kind of navigate this very uncertain environment.
Yeah, uncertain environment sometimes takes people into gold. Gold has been enjoying the run up to the rate cutting cycle, it seems, and especially when we start to get excited about 50 basis points, then gold seems to enjoy that quite a lot. Is that somewhere that we're going to talk to a commodities guest shortly on the program about this and other commodities? I wonder, from your perspective, from outside, you know, the specifics of commodity markets, how does gold look to you?
Well, gold has done really, really well, and it's not just because of the real rate. It's negative correlation with real rate that has been pushing it higher. By our analysis, gold has been a better geopolitical hedge than oil has been. When you strip out the impact of the dollar and real rate from gold price appreciation, there is still a large part of the performance that is unexplained, which we attribute to the additional premium that it gets for being a good geopolitical hedge. So gold has been a good hedge, and especially in the context of rates going lower, there is a place for gold in portfolio construction for sure. Now, having said that, it doesn't have any cash flow, so it's hard to properly do portfolio optimization through cash flow return and discounting future cash flow, but we do think that there is a place for gold in long-term portfolio construction.
Wei Li, thank you very much. Thanks for joining us. Wei Li, BlackRock's Global Chief Investment Strategist, with us this morning to talk about her strategy this Monday. We should check the core six then, Guy.
Let's take a look at what is happening with the big stocks around Europe and how they're performing. As we've already mentioned, Nestlé is seeing a significant downgrade from Morgan Stanley this morning. You can see that and the impact of it on the right-hand side of your screen. Nestlé and Verve down by 0.7% this morning. Elsewhere, a more nuanced picture. You do see some of the pharma stocks bouncing back. Novo is rising this morning. But elsewhere, LVMH fairly flat, Ferrari down a touch, ASML up a touch, Schneider. It's interesting, actually, in the light of what is happening with Rexel, not moving maybe very much, only up by 0.2%. So that's what the big stock story looks like in Europe this morning. Let's dip into some of the other stock stories. That Rexel story, fascinating, Joe Easton.
Exactly, guys. So the focus really in the single stocks is on M&A this morning. We can see on the screen here lots going on. Firstly, that Rexel move. So we're up around 9% at the moment. But as you mentioned just there, we're not coming up to the price that was touted on this potential bid coming in from a US company. Now, Rexel did say that they do think it undervalues the firm. Therefore, potentially, investors thinking it won't actually get over the line. It was at 28 euros, only trading at 25 at the moment. Another one to bring you is TI Fluid Systems. This time we're in the UK. It's a supplier to the auto space, makes brakes and that kind of thing. They've got a bid from private equity today, so that one coming up 14%. But another one that said they think it's opportunistic and undervalues the firm. But Rexel and TI leading the gains today. A couple of others to bring you just in M&A. Barclays, Brookfield walking away from a takeover of the company's payment division. That was potentially $1 billion, so that one coming down very slightly. And Commerzbank pretty much holding on to the gains that we saw last week following news of that UniCredit stake and those comments from Orcel over the weekend touting the partnership there. So those are all in focus in terms of M&A. One over in Italy to bring you is Saipem, up almost 5%. They've got a $4 billion contract for oil drilling over in Qatar, so that's a decent mover in Italy today, potentially a big deal for them in terms of the earnings. In terms of earnings in the UK, though, we have got Phoenix Group. Now, this one coming down. They've increased their dividend, but they're saying that they're seeing higher hedging costs than expected. They say that's due to the rise in interest rates. This is the UK insurer, and asset managers are coming down 2% despite that dividend increase today. Then staying in the UK, we've got some home builder data. Rightmove saying that house prices jumped around 1% on a year-on-year basis. That is more than expected. However, we have got risk events coming up this week in the UK, including inflation on Wednesday and then the Bank of England, of course, on Thursday. So those potentially taking the shine off this data, but the home sellers raising their prices. So we're keeping an eye on Barratt, Taylor, Berkeley, Persimmon, all of those usual suspects in terms of the home builders. Then in terms of the ratings, we have covered it already, but Nestle, we'll look at that one, down 0.7%. Only a couple of sells on that now. Morgan Stanley, as I say, I think that's the first time they've ever recommended selling Nestle in terms of our data anyway. That's what we're seeing. So that one is underperforming in the large caps. And finally, another one with a sell. This is MTU Aero, an engine maker over in Germany. Citi cutting it to sell. They say that the post-pandemic rebound in some of their engine sales for planes is actually coming to an end. So they recommend selling MTU. And that one is down 2% over in Germany this morning.
Joe, thank you. Joe Easton with a roundup of some of the stocks on the move then this morning. Coming up on the programme, we'll get back to some of the commodity themes. We'll discuss the effect of the Fed and the election on gold prices. Ollie Southampton joins us, Saxo Bank Head of Commodity Strategy, with the recent weakness in oil prices replaced by a short burst of strength, certainly this morning up 0.5%, 72.01 on Brent. We'll also get his views on what's happening in the oil sector. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back to the opening trade. We are 20 minutes into Monday's session. We have equity markets here in Europe trading down a little this morning. We're down 0.1% on the FTSE 100, down 0.3% over on the German market, getting the worst of the losses this morning. US futures flat pretty much on E-minis. Nasdaq futures down 0.2%. Let us just update you on what is happening in China and Shanghai specifically. The strongest typhoon in more than 7 decades has struck China's financial capital, bringing gale force winds and heavy rain to the eastern seaboard and disrupting holidaymakers at the start of a days-long national festival. We've got a couple of days of market holidays and wider festivities in China, really interrupted by this typhoon Bebinca. This is, we understand, the worst or the strongest typhoon to be hitting China since 1949. We've seen evacuations from parts of Shanghai and we've seen flights cancelled. So we weren't expecting any market activity there, but still, this is clearly quite disruptive, and you wonder how far that disruption goes. Let's talk about that and other things that potentially could impact on the commodities market. Let's talk to Olaslav Hansen, who's head of commodity strategy at Saxo Bank. Ola, really nice to speak to you. Thinking about China and Chinese activity levels draws our attention to the weakness in some of the Chinese data we got over the weekend, and then expectations perhaps of whether we go weaker on oil and broader commodity prices. What impact are you seeing in weak data out of China and what that does to the commodity space at this point?
Well, good morning, Anna. Clearly that the market is trying to adjust to a lower commodity demand in China. But at the same time, we've been basically dealing with these headline news now for the past 3 to 4 months. Also raising the risk that potentially some of these prices have overshot to the downside, simply because I think most of the bad news has been priced in by now. Most certainly the oil market, given the negativity we're seeing among investors, given the very high price we're seeing in gold, these markets are pricing in something that the other asset classes are not really showing right now, and that's really a potential recession or even a deep one. So I think at this point in time, we may have started to just been fed this headline too much and for too long, basically meaning that the market has come to levels where we may start to see some value.
Yes, what do you think has overshot then? You're talking about the data out of China, the Chinese growth story, or as if it maybe has bottomed out. So where do you see commodities having overshot to the downside?
I think energy is one of them. We've just been through, obviously, a couple of years where crude oil prices has been trading sideways. That's probably also why there's quite a lot of focus on the breakdown, simply because we've grown accustomed to relatively stable prices, courtesy of production cuts from OPEC in the past few years. But the break below 60 or below 70 in WTI is basically bringing U.S. shale pads closer to their break-even prices. Dallas Fed last week just said that the average price is around $65. So we're getting pretty close to that. So we are near levels where potentially some of this production growth that we're seeing from non-OPEC plus producers may start to feel the pinch a bit into next year. So that will help stabilize prices. But no doubt, obviously, that going from 1.3 million barrel demand in 23 to less than a couple 100,000 demand growth this year in China, that has been the big story this year, and that's one we're still watching.
Well, good morning, it's Guy. We're talking to our last guest from BlackRock, talking about the idea that gold is now a better geopolitical hedge than oil is. Is that correct in your view?
Oh, absolutely. Basically, gold or the weak oil price is also one of the reasons why gold is up here, because gold is pricing in some economic weakness ahead, and basically a world that's it's not really aligned. We're seeing the multiple different sources of support. Central banks is obviously one we've been focusing on for a couple of years. High net worth individuals, family office, they're all buying gold as a worry about the debt level in the world. We have multiple geopolitical risks. We have potential trade sanctions, uncertainty about the U.S. presidential election later this year. And on top of that, the rate cutting cycle, which is likely, which will start this week. So all basically just adding some additional support to gold. So I think gold strength is unfortunately a sign that the world is not perfect right now. And I think that's pretty clear for everyone to see.
Do I want to buy commodities into the Fed meeting this week on anticipation that we are going to see a 50 basis point cut that will deliver a further blow to the dollar, and that translates back into a stronger commodity picture?
I think that probably makes sense. If you look at the Bloomberg Commodity Index, we had this massive run-up since the pandemic. Then we corrected. We've been staying fairly stable for a while now at a low level, but we haven't corrected. We corrected less than 50% of that whole rally we had from 20 up to 22, 23, and that does indicate that we're starting to find some support here at these levels. I think the energy is one thing. Also, mind you, if we do start to see lower funding costs, that will help some of the countries that are where demand growth is likely to be the strongest in the coming years. And together with a weaker dollar, that potentially also is a sign that we're seeing some of the worst in the market right now.
Oh, look, gold seems to have enjoyed the conversation around whether we'll get a 50 basis point cut from the Fed. What's left to do on gold, do you think?
Well, just ride it out. It's been a tough one because we obviously have a lot of clients as well who wants to get involved, who have been looking for a setback. That setback has not really materialized, and that just highlights the underlying strength in the market. That the corrections have been very difficult to find. Also, the speculative community really got involved very early on this rally, so they're well in the money. So there hasn't really been the kind of volatility in gold like we've seen in, for instance, silver, where a lot of people got involved quite late, and then we went through quite a big correction recently. That is now coming back up, and we saw gold and silver up 10%, or silver and platinum up 10% last week, benefiting from the strength in gold. So I think just hold on to it. Talk about the next level up is obviously difficult. We've reached several revised new levels, new higher levels, but I'm sure we will probably start to see headlines talking about 3,000 sooner or later.
Well, great to catch up. Thanks very much indeed. Ola Hansen joining us from Saxo. Up next, we're going to talk about what is happening in the United States, another assassination attempt on Donald Trump. We'll talk about the impact of that next. This is Bloomberg.
In tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their countries knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center.
And that's news when you want it with Bloomberg News Now. Get it 24/7
on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Authorities
could face bigger challenges next.
It was going to keep rate World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Take a look where European markets are this morning. Stock 600 down 0.2%. Similar picture across most of Europe. In terms of the sectors, let me walk you through the action. On the upside, you've got a very defensive bias. The grocers are having a pretty good day today. The healthcare sector is not doing too badly. Downside, you've got the effect of China in the basic resources where we're seeing some weakness. Technology is soft. The car sector, the auto parts sector, is also weak as well. So that's kind of what is setting us up right now for a market that it's got a little bit to digest from the weekend, but there's a lot to look forward to in terms of Fed and other central bank meetings.
Yes, so on the macro front, central banks, 36 hours where we got a lot of central banks globally giving us their rate decisions, so that's going to be a focus. We also add into that what we've heard politically from the United States over the weekend. We've seen another shocking development in an already dramatic US presidential campaign. Members of the Secret Service have foiled a second assassination attempt in as many months on former President Donald Trump. Let's get more from Bloomberg's Bill Farries, who's been following the story for us. What impact is this likely to have on the campaign then, Bill? I mean, it wasn't as close a run thing as what we'd seen in July with the earlier attempts on former President Trump's life, but this no doubt worrying.
Right. Fortunately, the Secret Service agent who was one hole ahead of the president on the golf course appears to have spotted a rifle poking through the fence, fired in the direction of that rifle. The person there fled, and police say they captured the suspect in a vehicle on the highway north. In terms of the political impact, we'll have to see in the coming days whether this changes anyone's views about the race and who they're going to vote for. But for Donald Trump and the Republican Party in general, it does offer them a chance to turn the page from what has been a very rough week since that presidential debate on Tuesday last week, in which the former president was seen as really underperforming. A lot of the political discussion since that debate is centered on Trump's comments about immigrants allegedly eating people's pets. That has not been a winner for the Trump-Vance campaign. This shooting may allow them to move on to focus on things like the economy, where voters still give them fairly high marks and where they would probably like to focus their energies in the final 7 weeks of this campaign.
Bill, is this likely to have any impact on Donald Trump's ability to campaign? 2 attempts on his life in fairly quick succession. The Secret Service, I imagine, are tightening things up in a fairly big way. How is this likely to affect his schedule, do you think?
Yeah, we know already that the Secret Service had added extra layers of protection to the Trump campaign since that first assassination attempt. When we have seen him out in public at rallies since then, he's been more behind a kind of a bulletproof barrier, so a little bit more separated from the crowd. I think, listen, in this case, there's early praise for the Secret Service and their work on the golf course, but there is going to be another look at how they protect the former president and Kamala Harris and the two vice presidential running mates when they are out in the open, and whether there's more that could be done. It does lead to the risk that they're a little more isolated when they're out in these making these public appearances.
And there'll be an investigation, of course, around the particular suspect here, who we know has been taken into custody. Bill, you nodded to it a little bit earlier, but we don't have a very clear picture yet, I suppose, of what might have motivated him.
We don't know that many details. A 58-year-old man used to live in Hawaii, has a long history with law enforcement going back 20 years. NBC reported, based on court documents, that he was once convicted of owning a machine gun. He may have been charged in a hit-and-run accident. More recently, he has been very worked up about Russia's invasion of Ukraine. Even did an interview with the New York Times about a year ago, claiming that he was trying to help recruit foreign fighters to go to Ukraine and fight on the behalf of the government in Kyiv. We don't know how much of that really took place, but it's clearly an issue he's been very worked up about, and we don't have a sense of his political leanings or grievances, particularly with the Trump campaign at this point.
In terms of what happens next, just walk us through what Anna was alluding to whether or not we're going to see a move in the polls. The early indications appear to be, certainly from the betting markets, that we're not seeing the same kind of bump that we saw for Donald Trump post the shooting which nicked his ear. What are we hearing in terms of the expected impact this could have in terms of the polling? Does it have the same effects? Is there an expectation that will have any effect in terms of people's thinking?
It's a great question. I mean, this is a very different, it's a different campaign now. You even have a different candidate, right? With Kamala Harris in the race, you have Democrats who are very motivated. When you had that first attempt on Donald Trump's life, Democrats were very unmotivated. There was a lot of questions about whether he should get out of the race at that point. That period came after several weeks of good news for Donald Trump. So it may not have anywhere near the impact that first assassination attempt did. And in particular, there's none of that imagery so far, at least, no dramatic video of what took place on the golf course. You had that in the aftermath of that first attempt when the president stood up after getting hit and, shouted fight, fight, fight to his supporters. Those elements also help propel that bump in the polls at the time. We don't have that this time around.
Bill, great to catch up. Thank you very much indeed for updating us. Bill Ferris joining us on a second attempt on Donald Trump's life. Coming up, Germany imposing controls on all of its 9 land borders. This as the Chancellor Olaf Scholz faces increasing pressure over migration. We'll be live in Berlin with the latest on this story and a few others that are certainly moving here in Europe this morning. We'll talk about it all next. This is Bloomberg.
what about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Wednesday, the Fed decides.
I know we're all obsessed about what the Fed may or may not do on September 18th.
25.50, that doesn't matter so much.
We're being very measured where maybe other central banks aren't.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
We have made no decisions about future meetings, and that includes the September meeting.
At this point, the Fed is leaving it open.
It's going to be up to Chairman Powell.
Tune in to Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern.
Minutes into the equity market session. This is the picture you're looking at. To be honest, I'm not sure there's a clear kind of narrative coming at an index level out of Europe this morning. We're waiting, we're watching. In terms of what you're seeing in the sector story, you're certainly seeing a dash for safety this morning. You're certainly seeing the grocery sector doing well. The healthcare sector is outperforming. Miners, technology underperforming this morning. Certainly the China story being represented well here in Europe in terms of where the sector story is working. Let's talk about what else is happening in Europe this morning, because there's a few interesting stories out there this morning, certainly on the political front, that I think are probably worth spending a little bit of time on. I want to talk about the migration narrative, which I think is really represented in a number of different parts of Europe this morning. What I really want to talk about is what on earth is going on in Brussels. Because Thierry Breton, who is the current, actually he's not the current, he was the Internal Markets Commissioner in the current Commission, has resigned this morning in a fairly strong way. He has made it very clear that he is being pushed out. He has made it very clear that he has a certain degree of animosity, it certainly would seem, for Ursula von der Leyen. And this was what he posted just a few minutes before he resigned. His picture, apparently, at the European Commission, blank. Let's find out what is going on. Ollie Crook joins us now from Berlin. Ollie, he's not going quietly.
Guy, this is a really spectacular way to resign. I mean, we talk about strongly worded letters. So he put out that tweet first, that empty canvas, saying that this is his portrait for the next European Commission, because, of course, he's the commissioner that France has put forward for their nominations. And, of course, it's a blank canvas. That was a bit enigmatic. A few minutes later, we got the full letter. And I'll just quote bits of it here directly, because I can't really do anything better than that, saying that a few days ago, in the very final stretches of negotiations on the composition of the future college, you asked France to withdraw my name, this is a letter to Ursula von der Leyen, for personal reasons that in no instance you have discussed directly with me, and offered a political trade-off, an allegedly more influential portfolio to France in the future college. You will now propose a different candidate. We should say also, he said that in light of the latest developments, further testimony to the questionable governance, I've concluded that I can no longer exercise my duties. He's therefore resigning from the European Commission immediately. So this obviously is a really very sort of explosive way to resign and air unhappiness. There's a lot of negotiation, as we know, that goes on behind the scenes in Brussels, and people tend to like to leave that behind the scenes rather than coming out like this. We should also say, I mean, here's another passage here. Over the past 5 years, I have relentlessly striven to uphold and advance the common European good above national and party interests. It has been an honor, but perhaps not over the interests of personal bitterness, as we're learning from this letter today. Really a very spectacular way for a very influential figure within Brussels to go out.
And do we know why Ursula von der Leyen took objection to his nomination or his continued presence in the Commission? I mean, this is somebody who, of course, has had to deal with a lot of big tech bosses over in the States, and that's taken him into a digital conflict, shall we say, with Elon Musk.
Yeah, so without going into too much speculation, we do have some, some reporting on this throughout behind the scenes that they did not get along particularly well. So, of course, he's in his role as sort of digital enforcer. He had a few months ago written this sort of letter to Elon Musk. Again, a very blistering letter that he, again, unilaterally put out on X and then immediately came under huge criticism, not only from Elon Musk and the United States, saying that basically this was tantamount by some of his critics of meddling with the U.S. election, but also within Europe, and his own team had to sort of row it back. So he's a sort of controversial figure to a certain degree. What we also understand is this could also have to do with something that happened earlier in the spring with one of the figures that was in charge of SMEs within Europe who resigned, was very critical of Thierry Breton. The person who had resigned was part of the CDU, which is obviously Ursula von der Leyen's party as well. So there has been conflict throughout. What is interesting is that Ursula von der Leyen, if this is in fact what happened, would ask Macron at this late stage to do that. Why she would do that now rather than earlier on, I think is a bit of a mystery to everybody. But again, it catches a lot of people off guard here in Brussels.
Europe does not feel like it is on the same page right now. We have this story, which we need to fold into that narrative. The migration story as well. This on a day when Germany decides it's going to close not only its land borders or start checks on its land borders, not only in the east, but also in the west. Ollie.
Yeah, listen, Guy, I mean, this is an extension for 6 months from some of the checks that are already going on. So these are going on with the Czech Republic, with Poland, with Austria. But this is also now enforcing border checks for Germany on all of its land borders. So that includes Denmark's, now Belgium, France. And this is really a move that effectively suspends Schengen, right? I mean, you're allowed to do that legally within the EU for temporary periods of time. But we've had some of these checks in some of the countries there, the ones in blue, as you can see, since October. Austria, it's been a while longer, but this now effectively puts border checks on the entire, border of Germany. This is one of the anchor nations of Europe, one of the great pro-European nations, and under a government of, a socialist Olaf Scholz, coming under intense pressure politically from the far right and far left, going into another election this weekend where they're hoping some of this tough talk on immigration will be able to help them. But as you say, Guy, this does not bode well at all going into particularly a new commission where you really need European unity, particularly when you think about all of the issues that Mario Draghi has been enumerating last week. And if you're going to handle them at the European level, you really need unity. You're getting pushback from that now. We had Viktor Orban and Geert Wilders both really praising this move from Germany. So that's the praise that's coming in this morning for the Germans' move to today, creating those border checks.
Yes, if you have border checks between France and Germany, where does that leave Schengen and the wider EU project, I suppose, Ollie? But on the German specifics, it is really interesting. We're heading towards this another regional election, as you point out, next weekend. Again, migration being talked about, trying to talk tough on migration. But at the same time, you have Olaf Scholz talking to leaders from Kenya, to Uzbekistan, and today Kazakhstan. And part of those conversations is about controlled, skilled migration to Germany, because there's still how you deal with a tight labour market is still an issue.
Completely, Anna. And this is like one of the big dilemmas that Olaf Scholz is dealing with and Germany is dealing with. On the one hand, you have all of these issues with migration. And we should say that Germany is one of the biggest recipient of refugees on the planet. Number 3, it has more than 2.5 million people that have come under refugee status. But what Olaf Scholz is also dealing with is a huge demographic problem in Germany. They have been sub-replacement rate for more than 40 years. It's at 1.5 now. 2.1 is replacement. The sort of average over those 40 years is 1.4. They estimate 2 million job vacancies right now in Germany, and that is going to blow out to 7 million in 10 years' time. That is a problem that they cannot solve just by having more kids. They need skilled labor. They estimate that you need about 400,000 workers every year. So that's where you get deals like we got on Friday with Kenya trying to bring in more people to try to fill in that gap. Of course, that will not go very well with the sort of proposals and everything we've heard from the far right and left that are doing extremely well in Germany. So we talk about all these slow-burning crises that we really see coming down the road eventually, and the real difficulties in dealing with them. This is going to be a really interesting way in seeing how this plays out, because again, Brandenburg election this Sunday, I mean, the AfD is supposed to win. You know, Scholz is within a couple of points. Let's see what happens, but immigration is top of the agenda.
Ollie, thanks for the roundup. Greatly appreciated. Ollie Crook joining us out of Berlin. I want to take you to another story that is also a big issue in Germany right now. BMW shares down by 0.4% right now. It has been a move that has been extended over the last few days. This after revelations that the German automaker has taken 2 years to discover the extent of a braking system fault that brings in companies like Continental. Now, Bloomberg understands that customers and dealers began complaining about this issue to the company as early as June 2022. So this has been going on a while. Joining us now, Bloomberg's Elizabeth Berman, joining us out of Munich. Elizabeth, on an almost daily basis, you see coming across the news wires talk of recalls affecting various vehicles around the world. Now, normally we ignore these. Why is this one different? What happens now, and how big a risk does this represent for BMW?
Yeah, like you're saying, recalls do happen all the time, but I wouldn't quite agree that we tend to ignore them. I mean, think back to the Takata airbag disaster, like involving tens of millions of vehicles. And this one is certainly significant as well. It stretches across 1.5 million vehicles just at the BMW group. And it involves two of the biggest names in car making, BMW and Continental. As we describe in the story, this has been bubbling under the surface for quite some time, with the true extent of it only coming to light a few days ago. It shocked the market, as we could see. Both companies' names, they fell about 10% that day, wiping billions of their respective market valuations. In terms of the broader significance, I would mention that both of these names are, of course, under pressure in this massive transformation that's sweeping across the industry. Some are doing better than others. I would say that BMW has been selling more cars compared to their traditional competitors on the EV front. But whereas Continental, what I would say, has definitely been struggling a lot more. They've tried many things to improve their auto unit, and have this sort of a thing happen to them at this point really is quite a negative as they seek to spin off the auto business that they've got.
Elizabeth, where does this go next? What are we expecting to see? What are the kind of risks that this becomes bigger?
A few facets to this. I mean, on the one hand, you'll have the operational side of things. The cars need to be checked. We understand BMW has developed a software to check over the air whether a car is affected. Then some of these will have to come in for fixes, repairs. Perhaps the whole braking system has to be exchanged. That also depends partly on what regulators want in individual regions. But on the other hand, there's also the risk of this perhaps even spreading. And like I mentioned just now, Continental is attempting to spin off its auto unit. So it's a central product for them, this braking system. So to have something go so wrong there, that would really raise some questions about timetables around this push.
Can it do that spin with this going on, do you think?
I think the jury is out on that. Also, we haven't quite probed the depth of the issue. We've not really heard anything on the record from Continental itself. So it's a work in progress, I would say, but it has knocked the company significantly in terms of this plan as well.
So, I mean, this is just one part of a much broader negative story that we're seeing, Elizabeth, coming through sort of week by week from German automakers. Any sense that this is in any way coming to a head, or we're going to see some a resolution of these issues? I mean, Chinese competition, yes, we've got tariffs on it. There's still a debate about what those tariffs should look like, but it's not going away.
Yeah, I think you were just talking about sort of several slow-burning crises hitting Germany, and there is definitely a sense of a lot of negative developments that have been ignored for too long coming to a head right now. On BMW and Conti specifically, I think that is perhaps a part of that, but it wouldn't be the dominant thing in terms of ignoring developments, not paying enough attention. But yeah, it just definitely adds to the sense of doom that this core industry in Germany is undergoing right now.
Elizabeth, thank you. Thanks for joining us. Bloomberg's Elizabeth Behrman on the auto sector and the latest BMW lines around it. Let's just, Guy, dwell on what's coming up this week, because as we've said a few times, it's going to be a big week in terms of central banking, but there were a few other things to watch. We have some central bank speakers from the ECB starting the week off. We also get data then on Tuesday from the US in the shape of retail sales. That could be interesting, ZEW as well. Then on Wednesday, we get UK inflation data, a day before a Bank of England rate decision. Of course, we get the Fed rate decision that day as well. And on Friday, we bring things to a conclusion with the BOJ. The last time we heard from the BOJ, and we got some important US data, things weren't smooth.
And it's interesting, the language recently from the BOJ has been more hawkish. We've certainly had, from even the dovish end of the spectrum in terms of the voices we hear from them, a signal that maybe we need to be thinking about the BOJ raising rates on a more consistent and earlier basis. So I think that's interesting. The Fed, I think, is interesting. In some ways, 50-25 is maybe the wrong thing to think about. Because regardless, if we get 25 or we get 50, maybe what we need to think about is the spin that is put on it.
Yes.
Because you could get a hawkish 25, sorry, a dovish 25, and the signal is that we're going to do much, much more coming down the road. We're starting off cautiously, but we're going to do more. If they go with 50, because it is a signal, and the language that goes with this is a signal we're getting in early.
Yes.
We're kind of making, if we do more now, maybe we have to do less later. I think it's that nuance that I think is going to be interesting.
And I think dots are always interesting when we get updates, but in particular this time around, we'll get an update when we're really close to the end of the year. So the dots they'll have to give us what they're expecting to do by the end of the year, which is essentially telling us what are you going to do in November, December. And even if you don't want to give too much guidance to the market, the guidance will be there in those dots. So even if it's anonymized, we will have a sense of what the body, what the full body of the Fed and the FOMC thinks is going to happen between now and December in the context of whether they did 25 or 50.
Thinks is going to happen.
Yes,
I think is the key kind of phrase there, because this has been a year of incredible turbulence.
Yes, we started the year thinking that we'd get seven, I think. Yes, 1.7 rate cuts from the Fed. We didn't. We haven't got any yet.
No.
But the market has come a long way on the expectation that we will get some this week.
And the market appears to, the market always wants more. So is the central bank in the same camp now? Are the market and the Fed aligned? They've been very, very unaligned for large chunks. So I'm just I'm wondering how. Also, I think the market will play a role in this process. If the market pushes the Fed quite hard, i.e. positions aggressively for rate, is the Fed going to dismiss that market positioning and tell its own narrative,
and
or will the market make the weather?
Yes, and risk tightening financial conditions if it does that.
Precisely.
Yes, and because the market is expecting 100 basis points by the end of the year, and so if the dots don't give you something that looks like that, where does the market go? What does risk appetite look like in that context? So there's that to think about. Lots of other central banks, the Bank of England, the BOJ, not expecting them to move this week, but a lot of thinking about, the budget in the UK's case, or wages and inflation in the Japanese case.
Absolutely. And the fiscal story is, Crudy's not sitting here, but the fiscal story is definitely going to be represented. And I think we can kind of park the Bank of England, certainly, until we get that budget at the end of October.
Yeah, because we need to see the extent of tax hikes, what that's going to do to the economy, or expectations for that, and therefore what that does to the models over at Threadneedle Street. A lot to talk about this week. The Pulse is up next. Francine will be speaking to the CEO of Air Baltic as the Latvian carrier prepares to go public. That conversation at 9:40 London time. This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg. Another shock development in a dramatic U.S. presidential campaign as the FBI investigates a second apparent assassination attempt on Donald Trump. The Fed will begin a crucial pivot this week, cutting rates for the first time in more than 4 years as it seeks a rare soft landing for the U.S. economy. And the Fed decision sets off 36-hour monetary roller coaster ending with the BOJ on Friday. Meanwhile, the yen strengthens beyond $140 for the first time in over a year. So first thing is first, the markets definitely looking ahead to that BOJ decision. Ahead of that, looking at the Fed, and there is pretty much what's priced in is, of course, a cut, but we don't know by how much. Is it 25? Is it 50? We'll have a full roundup of the main top news and some great analysis on that. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacroix.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London. Now, it's a big week for central banks and the markets. We'll discuss that shortly with Joyce Chang from J.P. Morgan. But let's begin with the latest major development in U.S. politics. And former President Donald Trump is said to be safe and unharmed after an apparent second assassination attempt. Now, it's believed that the Secret Service detail opened fire on a man who was wielding an assault rifle at Trump's West Palm Beach golf course in Florida. So let's get more on all of this with our Bloomberg EMEA news director, Roz Matheson. Roz, I mean, this is an extraordinary set of events because it comes only 2 months after there was that first assassination attempt where his ear was clipped. What does it tell us about the state of U.S. politics right now?
Well, it's interesting because this obviously was perhaps less of an immediate threat to Donald Trump than that first one we actually was clipped in the air, but still it shows you just the climate around the U.S. election campaign and how febrile it really is, just a couple of weeks out, really, at this point, from the election. And what are we going to see in the remaining weeks of the campaign? It shows you an election that's extremely tight. The polls are very, very close within the margin of error in a country where voters are extremely polarized. And you can see that in the way the campaigns have rolled out. You can see the way that they're fighting over a couple of key swing states in the US Midwest, in particular, capturing just a small number of voters who could have the ultimate say in who's going to be the new US president come next year. And so what you've got is a climate of disinformation in campaigning, around social media, people feeding off that. Questions obviously around security and access to a former US president. But obviously the big question here really is, what does this do potentially for Donald Trump in the final weeks of the campaign? Obviously he's been struggling in the past few days. There's been, talk in his inner circle that his campaign is teetering a bit after that election debate and some of the comments he's making. Does this give him a reset?
So when do we know? I guess it's too soon for the polls now. Does it take a couple of days to settle?
Well, it might give his base, some fresh energy, because, again, what he wants to do is shift the narrative away from the past week or two and onto different things. And does that, give that fresh momentum back? Does it show up in polls? But throughout, for months and months, the polls have really been very much within the margin of error. One will be up for a week or two, and then the other will be up for a week or two. But no one's getting that clear water, again, particularly around those swing state voters, the sense that they're going to pull those voters out on election day. They have to draw them out first, and they're going to draw them out to vote for them. And the question is, does this just play again to Donald Trump's base? Those people are established voters for him. Do they get fresh momentum? But does it change anything when it comes to that core group of swing state voters and pull them out on election day? And that remains to be seen.
Ross, really quickly, what do we know about the person that attempted this and the security response?
We know he's a 58-year-old man. We know that he's now in custody. He was taken, he was obviously in advance. Security detail spotted him in the bushes. We don't know a lot about him. We know he's got a bit of a criminal history. We know on social media he's got very strong views, particularly about the war in Ukraine, about supporting Ukraine, volunteering to go there and fight himself for Ukraine. We don't know how that played into his thinking. He might have been a Trump supporter, it seems, at one point in time. He may have also been a Democrat donor at one point in time. Very little we know at this point around his motivation, but obviously he's in custody. We might find out more soon.
Ross, thank you so much, as always, for the terrific briefing on what happened overnight. Ross Matheson there, Bloomberg's EMEA News Director. Now, we're also joined by Joyce Chang, Chair of Global Research at JP Morgan. Joyce, first of all, welcome to London. I know that this is not something that's playing out in the markets, but it feels like all of this division, this chaotic 2024 campaign, at the margin must have an impact on investor behavior.
I think right now everybody is still thinking that they're going to be a divided Congress. So the presidential race is too close to call here, and it's going to be decided at the margins. So I think there's a sense that it's too early to actually make a call on this based on what we're seeing. Another assassination attempt is still not a determinant of the elections. This is an election that's going to be decided at the margins, and it's going to depend a lot on turnout, with a couple of key demographics potentially making a real difference. Younger people, who are now 20% of the voting base, and also women. There are more women than men registered to vote in the United States. So there's still a lot that could play out before the elections. I don't think the market's willing to take a position on it because the presidential race is sort of dead even, but divided Congress is also something that market participants are talking a lot about.
And Joyce, of course, I mean, we understand that, the economy is top, one of the top issues for voters. Immigration has risen in importance. Have you already modeled what each, potential administration of the White House means for dollar strength, Fed independence, or is it too soon?
Well, what we have taken is what Trump has said about tariffs and modeled that. So if you actually take a look at just the 60% tariff that is proposed on China, we think that could raise inflation by more than 1%. 1.5% if you have a 10% universal tariff. And the way that we actually look at the impact on the dollar is if you think a 10% increase in tariffs, we think that that actually could mean about a 5% appreciation of the dollars. So there's a lot of the signals that are contradictory. The call for a weaker dollar, but still the proposals that point to us that you're going to have dollar appreciation.
The wild card is, of course, the trade war.
Yeah,
right.
Trade and immigration.
Really, is that impossible almost to figure out how aggressive? I mean, some of the proposals have been pretty intense, right? It's 100% tariffs if you don't play ball with the U.S.
Well, I think that a universal tariff is the big difference if you look at Trump's policy. I think that if it is a Harris administration, you're seeing more targeted tariffs on certain sectors that are strategically important. But the universal tariff is really sort of a different ballpark. And that's really, I think, what the market is focused on when they look at the differences in policy, just the use of tariffs that's been proposed in the Trump campaign.
So you also have a great chart actually looking back to since 1945 S&P returns and how positive they've been, except for some presidential term. And there are only 3 presidential terms. So we had negative returns for the S&P 500.
Well, yeah, no, and the point where there were negative returns, you had the global financial crisis, you had the dot-com bust. So it wasn't necessarily about the elections. And this is why I think the market is really saying, look, the initial election results, I don't know if you're going to see much of a market impact. It's really what plays out in 2025 when you see the types of policies that can be put into place. Is it more of the status quo, or do we actually just see on trade and immigration where the presidential executive order can really prevail, that there's a shift in policy?
So what does this all mean for the Fed? I think, your economists are one of the last ones out to hold for a 50 basis point rate cut from the Fed when it meets on Wednesday. Are you sticking with that?
Yeah, we're still sticking with the 50 basis point call, but it is a debate, internally within the broader marketplace. But honestly, I think the market is more focused on the growth story than whether it's 25 or 50 basis points. And I think that, the sense is, the recession risk, it could be out there later in 2025 in the second half of the year, but it's not imminent right now. So when I talk to investors, 25 versus 50 isn't so much the debate, but really just how does the U.S. growth story look?
But so why are you so confident on, I guess, this jumbo rate cut, and does it actually make a difference on growth?
Well, I think they have the scope to make this rate cut right now. And right now you are seeing all of the signs pointing to doing more would actually probably send the right signal. When you look at the labor market conditions, that the upside pressures on inflation are waning right now, and that when you actually just look at just how restrictive policy is, there's a scope to do 50 right now. But I don't think there's consensus yet.
Yeah.
So it could still be 25.
So do you think the Fed is actually behind the curve? Because I think you're expecting 50 September and then 25 in December.
I think there is a debate that the Fed is behind the curve, but I'm not as worried about the labor market as some, because the household surveys are not showing that there's a lot of consumer demand is still there, and there's not a lot of job shedding that's going on. So I think that debate is going on. It's whether the Fed's tone, no matter what, I think is going to be relatively dovish.
But so you're expecting actually 50 September, 50 November, and then 25 in December.
Yeah, so no, we're calling that it is a cycle, but I think there's more concerns on looking into 2025, and that's in part because of the election results. Can you really have inflation, come down further given some of the policy proposals that are under discussion?
Joyce, do you have any worries about financial conditions then getting too loose?
We are seeing very strong demand in the credit markets now, and the things that cause a recession, feeding into financial conditions and credit markets, we're really not seeing signs of that. And frankly, when we look at things like the U.S. high-grade market, using 3.5% for treasuries at the end of the year, where we think spreads will be, we're looking at returns that are close to 9%. That's actually the best performance since 2019. So I'm not seeing that much worry about the financial conditions, and the consumer demand is still holding in well.
Joyce, thank you so much. Joyce Chang there, of course, from JP Morgan, stays with me, and we'll talk a little bit more, not only about China, but also the BOJ. Coming up, markets brace for, as we were saying, a big week of central bank decisions. Fed leading the way, but yen could also be very interesting on the back of BOJ. So more on what to expect next, and this is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Well, Bloomberg has learned that Intel has officially qualified for as much as $3.5 billion in federal grants to make semiconductors for the Pentagon. Now, the secretive program seeks to establish production for advanced chips with military and intelligence applications. You can see Intel pre-market gaining some 4.6%. And the bonds and yen both gaining today as traders prepare for a busy week of interest rate decisions. Well, we're back with Joy Chang, Chair of Global Research at JP Morgan. Joyce, thank you so much for sticking around. When you look at, the BOJ is very interesting because it gave us like a bit of heart racing over the summer. Yeah. What are you expecting on Friday?
So I think they hold here, but they still signal that they're prepared to move before the end of the year. So we're looking at December for the next move. But I think the messaging is going to be clear that that's the intent that they're on, to bring policy rates to 1% by the end of the year. So I don't think there's going to be that much debate on the signal of where they're going, but we don't expect them to take action.
But if you look at the unwinding of the carry trade, you believe what, we're 70% there?
70 to 80% unwind, but there's the broader story in Japan, that it's the only central bank that is in hiking mode. There's the private consumption numbers that also look quite good out of Japan. So it's not just the carry trade on the yen that everyone's looking at, they're also looking at the curve trade. And also at the Japan equity market, particularly looking at financials and looking at some of the domestic trends that we're seeing on wage growth, on private consumption as well.
But just if you look at what happened early August, I don't know whether it was miscommunication, the market's getting it wrong. Could we have these volatile bouts like we had for a couple of days?
I think that the volatility is here to stay. The financial conditions, though, as we discussed earlier, are still pretty supportive, though. But you do have that a lot of people are still in the carry trade right now, that they think it's premature to take that trade off. A lot of it has unwound, but I think you will get these one-sided moves, because when you look at a lot of the multi-strategy funds right now, the way that they're positioned, everything sort of moves in tandem as well. Yeah. So I think that other asset classes could get hit with some of this volatility as well, and that's one reason why we still think that some of the sort of more defensive plays make sense here.
What about China? Because if you look at China, we had a pretty terrible set of numbers, data points, again at the weekend.
Yeah, no, we've had to take our China forecast down over the last couple of months, and we're still seeing the age-old problem in China, Francine, that the consumption numbers are just not coming back there. So there's more concern still about the overcapacity, but the other thing is just that the drop in commodity prices is also something where we're seeing that China had been stockpiling commodities. They've stopped some of that import as well. That's having an impact on other emerging markets countries right now.
So overall, it's still all about U.S. exceptionalism.
Well, U.S. exceptionalism seems like it's still afoot on many fronts. There is like growth, through the first half of this year has been, 1% above potential. Yeah. And there has also been disinflation in the U.S., which is at odds with the rest of the world, and a softening of the labor markets and wage inflation, which is also at odds with the rest of the world. And so I think that this is keeping a lot of the focus, even with the elections and questions about what will happen in 2025, still on the U.S. market.
I mean, Joyce, the economy, and again, investors' actually appetite for understanding the economy is large, but a lot of the times they often have to readjust as new data points come in. What do you think the market is getting wrong right now?
Well, so I think that the market right now is not spending enough time looking at the fiscal debt. The fiscal debt is something that could have a moment of reckoning. And so we've seen market volatility off of the carry trade, but could you get another test on the market volatility off of the fiscal debt? Because we have not seen, whether it is from Harris or Trump, a real strategy that addresses the fiscal debt. Both of this points to just higher fiscal spending, and that brings up concerns about just Treasury demand, and whether we're going to see just a strategy that looks at the debt dynamics and the fiscal numbers.
But so what would that look like? Like a failed auction or something, just volatility because of investor anxiousness?
Yeah, I think the volatility because of investor anxiousness, but I think that's really probably more of a test in 2025 because what the U.S. had done was issue a lot of 5-year treasuries in 2020 during the pandemic, and that becomes more of an issue when you get to the second half of next year. And you have to raise coupons and the auctions.
Joyce, thank you so much. As always, Joyce Chang, Chair of Global Research at JP Morgan, stays with us in just a moment. This is Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Welcome back, everyone. Now, still with us, Joyce Chang, Chair of Global Research at JP Morgan. Joyce, I love this. We have half an hour going around the world. Yeah. So we talked about BOJ, we talked a little bit about China, we talked about the U.S. and the Fed at length, and we touched on emerging markets. We're sitting here in London, in the UK. We have a big, of course, the budget is October 30th. I mean, how do you see the UK as an investment opportunity, but also what the BOE does?
I think that investors feel like that a lot of the extremes are off the table that we had to look at in the UK, but it all comes back to the fiscal constraints. I mean, are the fiscal constraints such that you really don't have that much room to maneuver? And there's a lot of concern just on some of the basic services, NHS, basic infrastructure as well that have built up over the last couple of years. So I think there's relief that you're not going to see some of the extremes that we saw, previously. But how much of the fiscal constraint is really going to prevent the ability to undertake more reforms to really bring in structural improvements to infrastructure.
Joyce, talk to me also about global commodities. So we have some 5 key charts that we're watching this week. But if you look at gold, of course, it has had quite a lot of records.
Yes.
If you look at the oil price, it's fallen quite a lot. So how do you match the two?
Yeah, so I mean, I think the fall in oil prices, it's not about demand, it's really about supply. And a lot of questions about, you have non-OPEC producers who come into the market. OPEC itself seems to be searching for the price where the market will settle. Now, when we look at our models, we think that oil is actually about $10 below fair value. But when we look into 2025, I mean, we're looking at mid-60s for where oil will settle. And that comes back to the supply side of the equation more than the demand side, that you have a lot of production that seems like it could come online. And I think a lot of emerging markets, have been suffering because of this. We had also seen that China had increased its commodity imports by 15%, and that's tapered off over the last couple of months. So that has had knock-on effects on emerging markets.
And when you look at gold, I mean, I guess bullion's record-setting ways are giving investors a lot to talk about.
Well, I think there is still this desire for dollar diversification. Okay. It's coming from emerging market central banks and also from consumers. And so I think that gold just is, separately has its own dynamics that are driving it away from the rest of the commodity complex.
I mean, one thing, and actually it's a fact that I was told 2 weeks ago, which I didn't know, is that China imports more high-tech chips than it does oil, which seems like a pretty interesting fact. Any thoughts on the chips complex and how that gets redrawn through trade?
Well, I think that there is still a lot of focus on what will happen with tariffs, but even what will happen before the elections. Are we going to see that even in this administration, a last wave of measures that come in through executive orders like the tariff announcements that we have seen that could actually affect the chips market? So I think that irrespective of whether it is Harris or whether it's Biden, you're going to continue to see a combination of executive orders that don't need to go through the Congress, and then when the Congress does come back, next year, are you going to see further action that's going to be taken? So I think that question is just going to remain, on the table. And China, for what their strategy is, which is very focused on the innovation sectors and increasing the investment, it's not surprising that that's where the imports are also coming in.
Joyce, thank you so much, as always, for joining us. Joyce Chang, there, Chair of Global Research at JP Morgan Securities. Coming up, we speak to the Chief Executive of Air Baltic as the Latvian carrier prepares to go public. This is Bloomberg.
why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Another shock development in a dramatic U.S. presidential campaign as the FBI investigates a second apparent assassination attempt on Donald Trump. The Fed will begin a crucial pivot this week, cutting rates for the first time in more than 4 years as it seeks a rare soft landing for the U.S. economy. And the Fed decision sets off a 36-hour monetary roller coaster ending with the BOJ on Friday. Meanwhile, the yen strengthens beyond $140 for the first time in over a year. Now, let's talk airlines. And Bloomberg understands that Lufthansa is considering taking a stake in Air Baltic ahead of a planned IPO by the Latvian state-owned carrier. Now, it follows a tricky year for Air Baltic with challenges including engine issues, controversy over government aid, and a bond sale with high interest rates. We'll discuss all of this, opportunities ahead as well with the company's chief executive, Martin Gauss. Martin, thank you so much for joining us. I mean, this is an exciting period when you look at a possible IPO and kind of some of the process. Where are you in that process? How quickly could that come?
We're in the pre-IPO preparation, and that makes it so difficult. I would wish to be able to say more, but for that we have to announce the IPO, which we haven't done yet. Expectation is it can earliest happen second half of this year or in 25, but on the details of the IPO we cannot talk yet.
I mean, what are you hearing from potential investors? What are they asking? What are they excited about? What kind of things are you hearing behind the scenes?
Again, difficult to say, but what we can say feedback-wise is they like this story because it's the first European airline IPO after Wizz Air 10 years ago. And the story, Air Baltic, is a complete new story, a complete new aircraft. We can double in size in the next 5 years on the order book. So the story is interesting, but we can't give details yet what investors say.
So, but if there's an IPO, it could basically lead to more aircraft purchases, right?
We have ordered them. So we have already an order up to 100 aircraft, which is the story itself, doubling in size now. The concept is proven. We show that on the financials. But the IPO would, of course, enable us to get equity to execute that growth and go forward.
What can you tell us about Lufthansa and the fact that, we report that it's considered taking a stake in your company?
As you would expect, we confirm that there is pre-IPO investor discussions going on, but we can't comment on the details of that discussion.
I think Lufthansa has just extended the wet lease partnership with Air Baltic. So it's a good partnership.
That we confirm. That is a very good partnership where we have now a 3-year contract for even more aircraft flying for Lufthansa Group. And of course, that shows also that we have established ourselves not only as a scheduled airline, but also as a premium wet lease provider. And that is the unique story which we do not have yet in Europe in the airline world.
So, I mean, it's a good partnership. So it could show a prelude to something more between Lufthansa and yourselves.
again, it's a very good partnership, which we like, and I think both sides said that, and we continue saying that, but we cannot comment on any other discussions we have.
Martin, could you talk to me a little bit about the fact that Air Baltic has been impacted by this Pratt & Whitney engine issue? Like, where are you on that, and when do you see this being over?
We give guidance that we still have the impact of missing engines. That's the biggest issue. The engine itself works very well. Missing engine, and for the next 1 to 2 years, that will be still an issue. I think we see that. The engine itself is improving as we go. We have been the launch operator on that engine, on the aircraft. But yes, we see these issues with Pratt & Whitney, but I think we are in control of it 1 to 2 years, and then the shortage of engines should be over. That's the moment when we will not have that in the public. That doesn't mean the engine is then lasting longer, but sufficient spare engines will not ground aircraft.
I mean, it's amazing. I was looking at some of the statistics on Air Baltic. You operate one of Europe's youngest fleets, consisting of the largest numbers of Airbus A220s. How does the fleet change over years? In 4 or 5 years, to have visibility of narrow bodies, or how will fly differently?
Concept for Air Baltic is launch operator of the Airbus A220-300, today largest order book, with doubling in size in the next 5 years to 100 aircraft. So we've been very successful transitioning to just one aircraft type. That made our model, and we stick with that. So we do not intend to change the aircraft type, but we take a lot of deliveries, being the largest operator of that type worldwide.
I mean, leaving the IPO to one side, because I understand you're limited in what you can say, but what's your biggest challenge in terms of, it can be, jet fuel prices, it's actually the orders, making sure that you price the tickets in the right. Is it a bit of a juggling act, or is there something that you think investors are underestimating?
Actually, investors like us at the moment, we have a bond out there which is trading very well, and that is, I think, a result of the half-year results which we published, which were, again, record high, EBITDA, revenue, passenger numbers. So we look positive into the future. Again, it's a very different concept to what we see from competition, especially low-cost competition, and I think we found the right niche with a 150-seater, latest generation aircraft, benefiting from, if there's a high fuel price, from low fuel burn. The flexibility of a full-service business class and a low-cost economy. We have a lot of positive things around Air Baltic, which now seem to play out for us very well.
I mean, if you're doubling, you said you want to double actually in the next 5 years.
Yes.
That's huge. Is there a difficulty in finding the right slots, or is it more routes, or just more frequent routes that you already have?
We come from a small base, having around 50 aircraft now. To double in size means we go to 100. That is for others nothing special. We have demonstrated in the last years, coming out of COVID and having a war impact next door, to become the largest Baltic carrier. With that growth we demonstrated, we feel confident that we will double in size in the next 5 years.
Are you still expecting consolidation within the European airline industry?
Yes, we ourselves are a consolidator in our region, because they're all airlines which existed, I think 4 in my time already in the 2 neighboring states, are not there anymore. Air Baltic owns the market today, and we continue, we expand to the Nordics. And consolidation driven by the large airlines in Europe is going on. And as airlines are not reporting good numbers, that normally speeds up consolidation. Yes, I do see that happening. For ourselves, we're also part of it, as we have in the Baltics consolidated and the largest carrier in the Baltic states now.
And Martin, overall, how are people traveling differently? Is it mainly for business, or less business, that's since COVID, but more frequent trips for travel and leisure? And how do you see that changing actually in the next 4 to 5 years?
Corporates is the biggest impact, where the business travel as it used to be before COVID is not there anymore. Individual business travel is coming back. And what you see more today is that people fly more often per year, so we see stronger booking numbers going forward than ever before. That means more passengers, but more driven for leisure reasons, for visiting friends and family. The corporate business travel on short haul is still reduced compared to 2019.
Okay, thank you so much for joining us. Are you a coffee drinker?
Yes.
I have bad news for you, because Arabica coffee prices, we have some breaking news on Bloomberg. Martin, thank you so much. Martin Gausser, Chief Executive of Air Baltic. But Arabica coffee futures, this is the highest, most premium cup of coffee that you can get. Those futures hitting highest since 2011, and this is mainly on supply worries. Now, we have seen that rally. I'm a big coffee drinker, as all of our viewers know, so I do keep a very close eye on this, but the rally in the price has been gathering pace from ongoing concerns about harsh weather in one of the top producers, and that's Brazil. The nation, I understand, is actually wrapping up its harvest for 2024-2025, and production prospects have seemed to be weakening. So there you go. Your cup of joe, your cup of coffee is set to get even pricier as there's these persistently supply disruptions are pushing the cost for the premium Arabica beans to the highest in 13 years. Coming up, after a second apparent assassination attempt on former President Donald Trump, we'll bring you the details and discuss the race for the White House. That's next, and this is Bloomberg. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Could face bigger challenges next.
It was going to keep rating World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Welcome back, everyone. Now, asking prices for UK houses increased at double their long-term average pace in September. Now, property site Rightmove says the average price of homes coming to the market rose 0.8% to just over £370,000. Now, the jump comes as a sign of new optimism by home sellers in the wake of the Bank of England's first interest rate cut in more than 4 years. So let's bring in Sean Stepek, author of Bloomberg's Money Distilled newsletter. He's also the person that you call if you're buying a house, selling a house, or need a new mortgage. No, I'm kidding. You don't give out financial advice, but you understand the markets, John, better than most. I mean, what does it tell us? Is there confidence? Is it really the BOE rate cuts, or, you know?
Yeah, I mean, I think it's basically the BOE rate cut combined. Or sorry, actually, it's not the rate cut so much as the fact that mortgage rates have already anticipated the rate cuts. So if you go now and try and get a mortgage from a mortgage broker, you will be getting basically the best sort of price that you've had in about 2 years or so. It's still a lot more than it was 3 years ago, but now you can get like a 5-year fix for just under 4%, whereas you were talking about 6% right in the wake of October 2022. So buying conditions have got easier. Banks are competing quite hard for mortgage business. They're quite keen to write new loans. And I think that's basically what's driving it. Because ultimately, again, it's always about the price of credit when it comes to houses. Yeah. You know, the more that a given monthly payment will allow you to borrow, the more you can pay for a house.
But John, so you speak to a lot of investors or residents in the UK, and they say, look, let's see what's in that budget, October 30th. Do we know what Labour's intentions with homeowners is, apart from the fact that they need to increase supply if they're going to deliver on their promises?
Yeah, I mean, the good thing is they are focusing on the supply side. You know, there is no doubt that although Pricing in the short term is definitely driven by the supply of credit. Yeah. It's very obvious that house prices are incredibly interest rate sensitive, but they are also sensitive to supply. And there are definitely lots of areas of the UK where there aren't enough houses, and we need to build more somehow. You can argue about how to do that, but certainly it's good that Labour's focused on that. As far as the budget goes, it'll be interesting to see. It's not. I mean, the capital gains tax obviously is one element, but that is something you'd normally expect to affect landlords rather than residents. I mean, you know, there are some outside things that the Labour Party could do. Council tax reform is one. Council tax reform would be a very, very big move, and obviously politically controversial. But it is one way that they could shift towards having, I guess, an actual wealth tax in the UK that's based on property. I mean, the idea, I suppose, with a council tax reform is, rather than the current system, you'd kind of rewrite the whole thing so it was basically a kind of small tax on the value of your home or something similar to that. That, I think, would be contentious, but at the same time, it's the start of a 5-year term, so it's possible they could go with that. Other than that, maybe a stamp duty holiday, but that would just kind of boost the demand side, which is kind of pointless.
Okay, so we'll see. We'll get you back on many, many times before that October 30th budget. John, thank you so much. John Stepik, author of the Money Distilled newsletter. Now, also making news, Shanghai has been hit by the biggest typhoon in more than 7 decades, bringing gale force winds and heavy rain to the eastern seaboard and disrupting holidaymakers at the start of a national holiday. China's financial capital initiated an emergency response on Sunday, closing ports, bridges, and highways. Now, all flights in and out of the city's 2 airports were canceled in the evening. And Russia has reportedly shared, or is reportedly sharing, secret information and technology with Iran that could bring it closer to being able to build nuclear weapons. Now, Western officials believe it's an exchange for Tehran providing Moscow with ballistic missiles for its war in Ukraine. The UK and the US describe it as worrying and an escalation of Russia and Iran's military ties. Now, one of the most dramatic presidential campaigns has been dealt another shocking development. Members of the Secret Service has foiled the second assassination attempt in as many months on former President Donald Trump. Well, joining us now is Tina Fordham, geopolitical strategist and advisor at Fordham Global Foresight. Tina, as always, thank you so much for joining us. I mean, it's really unbelievable. This is the second assassination attempt, we understand, in 2 months. What does it point to? Division within American society, or even something more sinister?
I've been following U.S. elections. This is the 5th one that I've covered professionally in my career, and I don't think we've ever seen such a febrile political environment. As it happens, I worked on a note last night about nightmare scenarios and surprises as the news broke of the second assassination attempt. And what I think is that we should be prepared for even more of these dramatic kinds of surprises. You know, we talk about October surprises in U.S. elections. We've already had major developments. This is not a binary outcome kind of a race where, you know, Democrat or Republican and life resumes as normal afterward.
But so do the poll, I mean, what does it change apart from kind of realization that it's, you know, it's just unbelievable that this is happening? Does it change the polls? Does it change the way they campaign?
So the even more dramatic assassination attempt against former President Trump back in July didn't really move the polls. In fact, it barely touched the sides. Now, remember, in the immediate aftermath, many political commentators said, that's it, they should just inaugurate Trump now. Trump's ratings have since deteriorated slightly, still quite close. And I doubt that this foiled attempt last night will have any impact, apart from keeping that, you know, kind of political fever on a high boil.
Yeah, I mean, this was not at a rally. This was on a golf course.
At his golf course.
At his golf course. Does it change the way he campaigns, or does it change his behavior?
Listen, I mean, the Secret Service already increased its protection, and they foiled this attempt. Apparently, the barrel of the gun was sticking out of a hedge at Trump's golf course. He's got Secret Servicemen who accompany him on the course. In addition to what appear to be, you know, both of these suspects white male, middle-aged American men, there are also international enemies who would like to see Donald Trump out of this race. Iran has been pointed to, but again, does this help us get closer to the issues? No, the Sunday talk shows in America were all about the pet eating story, bizarrely.
But so, again, this is such a strange campaign because, immigration is kind of at the forefront with the economy, and there's so many non-truths being said about immigration. They have to convince, 300,000 people at the end of the day, and that's what will make a big difference. So is it really on knife edge, or are you going to have more tools to also help the markets understand who's likely to be president closer to November 5th?
I think that we're going to see even more misinformation, disinformation, distractions. The weekend full of the pet eating and Taylor Swift. Donald Trump saying on Truth Social, "I hate Taylor Swift." Now, again, I'm a professional political analyst. I talk to investors. This should be a sideshow, but it's actually the centerpiece at the moment. And the idea that the Trump campaign is playing three-dimensional chess, I think is not correct, because I don't believe this is helping them in the polls or with the audience they need to win over, which is independence.
So does he need to change campaigning? And again, I saw that.
Can he change?
Who does he listen to?
Again, I feel like this is stuff that's beneath us having the conversation. But another big story breaking over the weekend was his relationship with Laura Loomer, who is a conspiracy theorist and worse, and news coming out of the campaign that she is one of President Trump's close advisors is worrying, more mainstream establishment Republicans. I don't see this race moving towards the substance that markets want.
Yeah.
Obviously, with the FOMC decision tomorrow, there'll be a lot of focus on that, but more gyrations. And I think, choppy news and wild developments.
How does the Harris-Walz camp actually behave in the next couple of days?
Well, who was it who said never interrupt your enemy when they're making a mistake? J.D. Vance doubling down on the pet story and then saying, if I have to, quote, create stories to get the message out, it's hard to really top that. So they are doing some pretty first-rate trolling in their comms, the Harris campaign. October 1st is the debate, the vice presidential debate between between Tim Walz and J.D. Vance. Debates don't usually matter. Vice presidential candidates don't usually matter. They can't help at the margins, but we're at a race where it is on a knife edge and the margins really matter.
So all eyes on that political debate, and from now until then, who knows what happens. Tina, thank you so much for joining us. Tina Fordham, geopolitical strategist and advisor at Fordham Global Foresight. Coming up, more on what to expect as markets gear up for a major week for central bank decisions. That's next, and this is Bloomberg.
is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Well, traders bracing for a busy week for central banks with decision from the Fed, the Bank of England, and the Bank of Japan. Let's bring in Paul Dobson, our executive editor for Asia Markets. Paul, I mean, I've taken too many bets, far more than I wished on, these Fed rate cut wagers. Does it really change dollar dynamics and the way forward for a lot of the currencies?
It's a really good question. I think that the market has been running from one side of the ship to the other quite aggressively over the past couple of weeks. We almost ruled out the possibility of there being a 50 basis point cut, 25 pretty much nailed on by the middle of last week, and now we're back to getting very excited about the possibility of a 50 basis point cut. And then how much more aggressive can the Fed be after that, which is why the dollar is weakening, right across the board at the moment, with currencies like the yen really in the ascendancy and gold powering higher as well. And fueling that kind of real demand for risk that we're seeing at the start of this week as well. So I think if the Fed doesn't deliver on those cuts, then the market's going to be disappointed. But the challenge is, can they also keep the people and those concerns about the US economy under wraps if they are going with more aggressive cuts? Will they be able to avoid spooking people and undermining some of the excitement that the market is expressing at the start of this week?
Yeah, and Paul, so we have the Fed, but then what about the BOJ? I mean, last time it was like a mess. They roiled, global markets. What are you expecting this week?
Yeah, I think that the BOJ may be a slightly underappreciated risk because everybody is so focused on the Fed at the moment. But, the market is pretty confident that we won't see any more action from the BOJ until December or even later. Economists are saying December would be the next hike by the BOJ. If they make any noises about the possibility of moving sooner than that, that might really rattle the market, see the yen appreciate again, and maybe we get to see some of those little ripples that we saw as a result of carry trades being blown up like we had 6 or so weeks ago. A lot of that has been unwound already, but there's probably still some risks out there if we do see a sharp appreciation of the yen from these current levels, having broken through that 140 against the dollar mark earlier today.
Okay, Paul, thank you so much. As always, Paul Dobson, our executive editor for Asia Markets. And of course, in Asia, we also had the the string of poor Chinese data that's playing into the markets, leaving traders wondering if authorities would maybe initiate some more forceful stimulus. Up next, Bloomberg Brief, Danny Berger and Manus Krani in New York. And this is Bloomberg.
prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning from our global headquarters in New York. I'm Manus Granny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set your agenda.
The 50 basis point cut stays alive. Rate traders keep the pressure on ahead of Wednesday's FOMC decision. Suspect in custody, former President Trump survives another assassination attempt just a day before early voting begins. And raising the alarm in Washington, Russia shares information with Iran on nuclear weapons while Houthi missiles reach central Israel. Good morning, Manus.
Danny, very good morning. Stocks had their best week on the S&P 500 of 2024. The Nasdaq put on at 6% in the space of 5 days. But this rotation has been barbelled. It's been out of Mag 7, let's say, from the peak into the broader market. The Russell there up 0.5%. We've gone from 4% odds. Let's have a look at the bond markets. We've gone from a 4% odds of a 50 basis point cut to 46% probability. That has driven these yields lower, and we start the week with 2 years trading through the 2-year low, giving back 36 basis points in the month of September. So the debate is rocket fueled on Friday about a 50 basis point cut. Keep an eye on dollar yen breaking 140, Danny, for the first time since 2023. What will the Fed's message be with this hallowed cut if it comes?
At the moment, rates markets are pricing in 62% odds that they move by 50 basis points. We have gone through a huge swing from CPI, where it seemed less likely than more that we would have a 50 basis point cut. It's almost as if the market has done the work for the Fed, saying if you want to move by 50, we are okay with it. Because part of the argument against 50 had been, would it be the Fed saying, we know something that you don't? The market has already moved for them. It wouldn't be a surprise anymore.
Well, and that is what was fueled on Friday. We debated this about the Wall Street Journal article. It relit the torch paper, but as Amanda Lynham from BlackRock, who was with both of us on Friday on the set, said, this is about the messaging. If you do go for 50 basis points, why are you going for 50 basis points? If you're going for 50 babasis points, is that the start of a sequence then that takes you to a much deeper and more aggressive cycle? Clarity in the messaging to the zip code of 3 to 3.5%. in the neutral rate, that hallowed neutral rate.
What does it say about clarity, though, that we're left reading the tea leaves from stories from Wall Street Journal and the FT trying to decide what the Fed will do? I saw one note this morning, Manus, that said that the reason bond markets have been able to rally so much on Friday and today is because we didn't get any more articles. That was the reason, that no one from the Fed tried to leak something to a friendly journalist to push back against it. Are we in a problem if that's how they're basically trying to communicate policy?
Well, it's a sad situation. We've got retail sales, we've got industrial production as well. Maybe they will be the sword of Damocles. Let's get to Mads Peterson. He's the CIO for Human Edge Investment Technology, weighing in on this upcoming Fed decision, writing this. They should now gradually but decisively be cutting to close to but slightly above the neutral rate and let the economy stabilize around these levels. This will be better than trying to outsmart the economy and the markets. Mads joins us now. Mads, good morning to you. Gradually and decisively, two very different things according to the market. So the question to you is 50 basis points warranted, and would that constitute decisive?
That would constitute decisive. It's absolutely warranted. The Fed is fighting the worst thing you can be as a monetary policy authority. They're fighting a ghost of inflation, which doesn't really exist anymore. So they should just get on with it. I think it's not sure they will, but they must signal that they have understood the message, at least from the delinquencies in credit cards and the car loans, which are not really being paid as they used to. And they should be very clear that we are on the way to neutral.
How should we understand 50, if it is indeed 50, as to what you're advocating, Mads? Is it basically just a one-off large cut? Or if they go 50, does this set a precedent that they're trying to move back to neutral quickly and we could expect more?
They should, if they can anyway get their way around it, do a very clear communication that we are going to neutral at a decisive pace. Ideally, they won't do that, but ideally they should say, we have learned from our mistakes. We were too late with the hiking and we were too late with the cutting. So now we're going to position ourselves, instead of pushing the pendulum back and forth and getting the swings larger and larger, we're going to try to stabilize the economy by having a slightly contractionary monetary policy until inflation is bang where we want it. So they should just give a clear communication. It should take him 3 to 5 minutes and say, I hope all is clear, and see you in 6 weeks.
Well, you're very hopeful that they're going to do something like that. I mean, if history is anything to go by, it might be a little bit more tentative than that. But how do they best communicate that destination? Is it through the dots and the long-term rate, or is it the very short-term version of what's on the dots?
No, the dots are not helpful because they have been messing too much around with the dots, and they're run by too many different people. So it's in the wording, it's in the message which they prepare. The most important is to write it there and say where we're going, because that's the thing they have time to prepare. It's difficult for the chair to stand in front of people and explain things and get the message right. So he must be clear in the messaging which is written down. That's what we can all look at. And then I think it would be nice if some of the following speeches would weigh in with the argument being now stability is more important than trying to push the economy. The mandate is to stabilize the economy, and central banks have been destabilizing the economy. So less action and more clear direction is the way forward.
Yeah, one of the weird things this week, Mads, just for what it's worth, is that only Powell is scheduled to speak. So far, we don't have any other scheduled speakers, when usually you do have that to kind of massage the message. But here we are, Mads. We're debating 50 points for the Fed. It seems like a lot of people and markets are leaning towards it. We just got 25 from the ECB. There's a BOE decision where they're widely expected to pause their cutting. Mads, does it make sense that we're talking about such an aggressive cut from the US and not from the rest of the developed world?
No, the ECB is obviously much further into policy mistake area. They should have cut 50, and they should have cut 50 at both the meetings, and they should be on the way to 2.5. And it's much more serious because, at least in the US, we have nice growth. We have the situation is not fantastic, but the situation is good. Yeah. In Europe, Germany has not been growing for 5 years, the largest economy. That's like in the US, if Texas and California and Florida, none of them were growing. Yeah, it's serious. And still the ECB gets the messaging. I don't even know what the message was after the meeting because they were so confused. And then they do 25. It's a little bit disgraceful.
Okay, so that's a real take on the ECB. You have been consistently bullish and pro-risk. I just wonder, to what extent do you sustain that, regardless of whether it's 25 or 50 basis points here in the US?
I don't think the 25 or the 50 is important. The important is the message. So if we get a really fumbled message and a lot of people talking afterwards, we might reduce our risk stance. But at the moment, it's driven by very fundamental things. We have a fantastic recovery in earnings, which is very good. We have a very nice transition in the earnings composition in the S&P 500, and we're full risk on, and we also have some NASDAQ direct exposure. But we have a very nice transition where the technology companies have for long been the largest market cap with the platform companies. But now they are also transforming this into real earnings. And people talk back and forth about NVIDIA. But the fact is, NVIDIA has the strongest clients in the world, and they bring out products, and they have free cash flow, and their clients have free cash flow, and they use it to buy. So in this sense, the same dollar spent in technology is now generating more profit. So in that way, it's a good recovery. It's also creating disinflationary forces. So it's a very nice situation, and therefore we're probably, I think, going to stay risk on at least for the next weeks or months.
Yeah, and it has been tech that's been leading things, Mads, except maybe for Friday when you had the Russell 2000 outperform. But we did have as chaotic of a political weekend as you could ever have, with the rhetoric really whipping up about different things, another attempt on the former president's life, and markets aren't budging. They did last time, Mads. You had this Trump trade put on in force. Is it that the Fed's more important, or what's going on here that markets aren't responding to a big political event?
Well, it's a sad event, obviously, but we know that there's a lot of relatively crazy people with relatively dangerous weapons in the US. We hope that they have it under control. Looks like it now. The Fed is much more important than the politics at the moment. There's a large probability that whoever wins the election will have difficulties getting things through the Congress because of the configuration there. Markets have priced in the re-emerged probability that the Democrats actually brings them the candidate, which many in Europe would favor, of course. And we'll leave the decision to the Americans with all due respect. But the markets are focused on the price of money. And Trump is positive and Harris is moderated. So while her plan is not fantastic, it's not disastrous, and markets are more, the Fed is much more important for this week.
So we'll wait for Wednesday for that. Mads, thank you so much for your time this morning. Mads Peterson of Human Edge Investment Technology. Manos, let's get to some of the other top stories now that are trending on the terminal. BMW took over 2 years to discover the extent of a braking faulty system, the fix of which is expected to cost the car maker over $1 billion. Customers and dealers began complaining about the faulty brakes in June 2022. It wasn't until October of last year that an in-depth review was put into system was launched. A profit warning last week wiped 5 billion euros off of BMW's value.
Thierry Breton, the European Union's influential internal markets chief, who has often tangled with Elon Musk's X, and that is Instagram, resigned on Monday from the European Commission. Breton accused the Commission President Ursula von der Leyen of asking France to withdraw his name as a nominee for personal reasons that she hadn't discussed with him.
Intel shares moving higher in the pre-market trade by about 3.8%. The chip maker has officially qualified for as much as $3.5 billion in federal grants that will allow them to make semiconductors for the Pentagon. As of Friday's close, the stock had fallen 61% to year.
Coming up, the former President Trump is safe after a second assassination attempt in 2 months. More details next.
Later this hour, we're also going to be catching up with State Street's Maria Waitman on the big week for markets. This is Bloomberg.
everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching The Close. Welcome to Balance of Power.
This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Former President Donald Trump is safe and unharmed following a protective incident shortly before 2 p.m. on Sunday at Trump International Golf Club at West Palm Beach. The U.S. Secret Service personnel opened fire on a gunman located near the property line, and this matter is under investigation.
That was Special Agent Rafael Barros of the Secret Service after former President Trump is now safe. The Secret Service prevented another assassination attempt at his golf course in West Palm Beach. The presidential candidate wrote in a text to supporters, "My resolve is stronger after another attempt on my life." Joining us now with more is Bloomberg's Anne-Marie Hordern. Anne-Marie, I mean, it should be said, just first off, that the Secret Service did their job this time. They protected the former president. But what does it say about this environment that this is happening yet again?
Well, there's a lot of questions that still remain as we wake up this morning after what the FBI is investigating a second assassination attempt on the former president's life. A lot of questions about a lot of beefed up security already since what happened in Butler, Pennsylvania 2 months ago. But there was a big question about, do sitting candidates, does a former president deserve maybe more protection when it comes to the perimeter of how far the Secret Service goes out? And this comes from the Palm Beach County Sheriff yesterday, briefing reporters, saying that the Secret Service was, quote, limited to the areas that they deem possible. If Trump was the sitting president, we would have had this entire golf course surrounded. What happened yesterday was, and this is what was according to the Palm Beach County Sheriff, who was walking us through exactly what took place at the golf course, which is about 15 minutes from Mar-a-Lago. You have to go over the bridge into West Palm Beach, was that the butt of the rifle was sticking through the fence, and the Secret Service will move, one agent will move to the next hole to make sure an advance work of the next hole that the former president was about to go, and spotted that rifle and then was able to engage with this individual that took off. They were able to apprehend him on I-95 in the neighboring county. But now there's going to be a lot more questions, I think, about the perimeter of this, and also, does former President Donald Trump, candidate and Vice President Kamala Harris deserve the same exact protection as sitting President Joe Biden would?
But this is also going to raise major questions around the rest of this campaign. There's, 2 attempts in a very, very short space of time is going to change the security and the ability to be out there on this campaign, or the nature of their visits on this campaign trail as well.
Well, we've seen a lot already change, even following the attack on the former president, Butler, Pennsylvania. Just 2 months ago, we saw in some campaign rallies, Trump was behind protective glass. I think a big question now, given what we heard from the Palm Beach County Sheriff, is going to be this idea of the perimeter. How would potentially that golf course have been protected if it was Joe Biden? Of course, a ton of questions are also going to be about the individual that was apprehended.
Yes.
What was the motive? They still are investigating the motive for the shooter in Butler, Pennsylvania. So a ton of questions still remain.
But before Sunday, the rhetoric around the campaign had been ones of talking about immigrants, cats and dogs, about Taylor Swift. Trump's team, I know, really wanted him to concentrate on the economy. Is this a shift from the Trump team? I mean, I guess we'll see if it shifts again after Sunday, but what they think is successful in trying to get voters out?
Well, I think definitely this is going to be a shift, at least for the foreseeable future in this week. I will note I haven't seen any changes yet to either candidate's schedule. We did see changes to the candidate's schedule following the attempted assassination in Butler. But to your point, Danny, when we look at, you know, the remaining timeline to November 5th, the Trump campaign and individuals closest to him really want him to focus on the top two issues, which in some polls still favor him, and that's the economy and immigration.
Okay, Anne-Marie, thank you very much. That's Anne-Marie Horder and on the very latest assassination attempt on former President Donald Trump. Coming up on the show, a look at what else is making the headlines around the world, including a record-breaking night at the Emmys for Shogun. Context matters on Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
It's Bloomberg Brief. I'm Anna Scrani alongside Danny Berger in New York. It's a pivotal week for markets, but it's also a crucial week for Boeing. The firm is set to begin talks with the Machinists Union and the federal mediators. That's on Tuesday. For more, let's bring in Benedict Kamel. He is tracking the story. You were with us here in New York on Friday. Benny, good to see you again this morning. Pressure is mounting on Boeing. RBC say it's costing them $500 million a week if they go out full on this strike. So the pressure over the weekend, any progress over the weekend?
No real progress over the weekend. What we're going to have next is Boeing workers the union reps and the company meeting on Tuesday with a mediator. They're bringing in somebody to sort of help them cut through the disagreements that are pretty consistent and still fairly pronounced. So really, as you say, the pressure is on Boeing to try and resolve this as quickly as they can. The clock is ticking. We were talking in this program on Friday early in the morning, and then throughout the day, we got a lot more pressure. Rating agencies came out, Fitch first, then Moody's, both saying that they might have to downgrade Boeing, and in that case, the downgrade would be dramatic because it would put them into junk territory. So to have a sort of blue chip company with $45 billion in debt suddenly in junk, that's something the company will be very keen to avoid. And the rating agencies made a point saying the strike is really what moves the needle here. So if they can get this over the line quickly and make it just a short stoppage, then fine. But if this drags out, then they're sort of heading for a world of pain.
Well, I mean, to that point, the CFO of Boeing has said that they'll do what's needed to protect their rating. Does this mean that those striking now have an even bigger upper hand, Benny? Because if not only do they face work stopping, but they face debt becoming more expensive.
Yeah, you're absolutely right. I mean, Boeing doesn't have a lot of wiggle room here. For them, it's really a balancing act trying to figure out, okay, how much can we afford to give a little bit more to workers or keep the strike going? And really it falls more into the camp of giving more to workers, so the workers do have an upper hand here. The rating agencies sort of unwittingly gave another sort of arrow in their quiver in their negotiations. It will be interesting to see just what West's comments mean. Does it mean they will have to raise equity? He didn't spell it out specifically, but that certainly is among the options. That's going to leave equity investors somewhat spooked. Stock already really under pressure this year, and that won't help. So sort of the overall picture for Boeing is pretty bleak, was bleak coming into these conversations, and after Friday hasn't improved.
Benny, we really appreciate it. Benedict Campbell there in Berlin. Okay, let's get to some front page news now. Look at what's making headlines around the world. First up in the Bloomberg this morning, Russia has been sharing nuclear secrets with Iran that is fueling worries for both the U.S. and the U.K. Manis, the story is that Iran has been sending missiles back to Russia in exchange for technology. Tehran says it seeks no nuclear arms, but doubts still remain there.
The FT leads with Berlin's bankers at J.P. Morgan invited UniCredit to bid for Commerzbank's stake. Now, the bankers were advising the German government on the 4.5% stake. So Berlin has repeatedly signaled to UniCredit and to European rivals circling Commerzbank that it was not interested in selling to them.
Yeah, and this goes back to the German government saying that they were surprised that UniCredit had bought some, to which UniCredit said, we literally bought from you. How could you be surprised?
and sounds as if sounds as if he's ready to do a heck of a lot more. Now, the Emmys, you like this?
Yeah, well, Shogun won basically everything at the Emmys last night. Have you seen Shogun, Manis?
I haven't seen Shogun. I'm more Netflix and Baby Reindeer, which actually did quite well as well.
No, I'm that obnoxious person that whenever anyone talks about Shogun, I'm like, well, I read the book. Like, I'm that person. I'm like, well, I read the book. I did really like the book. I've yet to see the show. I'm worried it's going to be gory, which is why I haven't dove in yet.
It won 18 Emmys and the Best Foreign Language Series, so it's pretty stunning, and it's good to see. Now, as I say, I was lost in Baby Reindeer. Netflix got 24. Relative to Disney, underwhelming.
But you know what the crazy thing is that they had a smaller lineup, and some of the categories, like Best Talk Show, lost nominees because there literally weren't enough shows to submit to it. So it's this whole, like, what do Emmys mean in sort of the changing and death of linear TV. Speaking of which, stay with us on this linear TV format. We're going to be seeing to State Street coming up.
prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger and Manish Cranny, let's set your agenda.
The 50 basis point cut stream stays alive. Rate traders keep the pressure on ahead of Wednesday's FOMC decision. Suspect in custody, former President Trump survives another assassination attempt a day before early voting begins. And raising the alarm in Washington, Russia sharing information with Iran on nuclear weapons, while Houthi missile reaches central Israel. Danny, good morning. Countdown to the Fed.
And stocks continue their rally, the best weekly rally of the year. We are less than 1% away from all-time highs. Again, higher just barely on the future session, up 0.1%. I want to clarify something I said earlier, Manis. I'm going to blame it on the poor liquidity of this morning's market. Japan is closed for a holiday, as is China, as is South Korea. So bond trading is a little bit odd. Fed fund futures have odds of a 50 basis point hike at around 65%, but OIS, which is more liquid, is around 48%. So we're almost at even odds. Yields move lower yet again, 3 basis points. We're 3.5% on your 2-year yield, the lowest since 2022. 10-year also falling by about 1 basis point this morning. Meanwhile, we go through 140 on dollar versus the yen. 139.94 is where we stand, down 0.6%. And Manis, we also have a BOJ decision to round out the week too.
Yeah, just imagine if you get that dovish tilt from the cut and maybe the narrative from the Fed. Put that in combination maybe with no change from the BOJ, but maybe a little bit of a hawkish intimation. And you've got dollar yen trading through the 140 level. The last time we had major upset was over dollar yen and was over the Fed guidance and the jobs, the payrolls number. So this is quite a toxic combination that you could have for this week, not just for the dollar, but indeed for overall for risk.
It's a good point. It's interesting that risk isn't treating it that way. That equity markets are celebrating the coming of 50 basis points of cuts, but at the same time, they also didn't like weaker data. So is this a logical inconsistency? You just look at small caps, Manis, which rallied 2.5% on Friday after rallying 1% the day before.
But look at the journey. This time, 7 days ago, Monday morning when we came in, we were at 4% probability of a 50 basis point cut. This is using LIBOR OIS. We can all argue about what is the best measure. We were looking at Fed funds, but LIBOR OIS has gone from 4% to 46% odds of a 50 basis point cut in 5 days.
Let's talk about what that means for this risk market. Joining us now is Maria Waitman, the senior multi-asset strategist at State Street. Maria, we are just 1% away from all-time highs. How do you understand what 50 basis points, should we get it, means for equity?
Yes, good morning, and very happy to be on the program. Equity markets like rate cuts, and I think for equity markets, I mean, I won't say it's kind of indifferent between 25 and 50. I think what for equity market is really important is kind of the whole journey that Fed is embarking on. And Fed is trying to do something that has rarely been achieved. So they're trying to engineer the soft landing. And I mean, historically, when Fed cut rates, it's more often than not we got into recession. So trying to get ahead of a cycle seems to be a good idea. And that's what market is kind of trying to kind of price in terms of 50 basis points cut.
Is that how you'd explain then why the Russell did so much better on Friday relative to the rest of the market? Do you think there's this last hope that it is the moment to rotate?
I think there's. I mean, for Russell, in my mind, it's a little bit of hope over experience. I think with Russell, I mean, market is desperate to see this big cuts is going to help small caps, and small caps really need a lot of help. I mean, the latest chart I drew is looking at profit margins in Russell. They're only like 1.5% profit margin in those companies. So yes, exactly, small caps really need very aggressive policy. For them, I worry that it might be a little bit too late.
Maria, Manus made a really good point in that the setup isn't that dissimilar from the market quake we got early last month. That is a more weakening U.S. economy, not necessarily weakening, but odds higher of a 50 basis point, and a BOJ decision. And you see a strengthening of the yen again this morning, something that a huge amount of appreciation ruptured the entirety of global markets. Are you worried at all that we might get something akin to that this week, just given how monumental it is?
I think the setup is different. I think the fundamental difference is that what we look at State Street custodial database, we see that carry trade has been very crowded a month ago, and has been completely unwound. And institutional investors actually, they underweight FX carry right now, which I think is really important in terms of thinking of market reaction. So I think market is a lot better prepared for potential kind of turbulence. So that's kind of makes me a little bit more relaxed about potential outcome.
There's still the fabled $6.5 trillion sitting in money market funds. And we're having this debate whether it goes to bonds, which are already juiced, relative to equities. What's your take?
Well, I mean, you know me long enough.
But I know which side you're going to come down on. You're an equity lady.
No. I mean, to be honest, I think equity is a really good setup right now, because what we heard from Chairman Powell, he's focused on labor market. He wants to support labor market, and as I said, he wants to get ahead of the cycle and maybe cut preemptively. But underlying economic activity is not, I mean, it's slowing, but it's not terrible. Profitability is slowing, but it's not terrible. And there are pockets of the market that look very strong, and you would not be surprised to hear me that they're in large cap quality names like tech, like healthcare. So that's kind of our take, is that equity market is actually in a very reasonable setup, and we had a bit of a pullback that allows investors to come back in and buy this dip.
In the land of big cap tech, Maria, there's a lot of criticism that the swings you're seeing in names like NVIDIA, one of the biggest stocks in the world, looks something like you'd see from a penny stock, dropping 5%, rallying 4%, rallying 8%, dropping another 3%. Is there a concern that this kind of volatility in the stock makes it more difficult to own, despite its future prospects of the AI promise?
I mean, volatility is definitely not a very pleasant characteristic of an asset. But I think for us, the reason there is such volatility is because investors are really crowded in tech stocks. Yes, that has been the trade. I don't know how far you want to go. I mean, last year, 2 years, 3, 10 years, that was a place to be. And institutional investors have built up those big positions. So any kind of uncertainty, and we have a lot of uncertainty, particularly as a cutting cycle about to start, will we avoid recession? So you sell what you have, and the largest position obviously is in technology stocks and kind of semiconductor stocks. So that induces volatility. But I'm hoping that once we get on a kind of Fed gets on the cutting cycle, we get a clear path of what they're going to do. So that will alleviate this volatility to some degree.
Maria, I'm just looking at big tech's profitability. We've gone from 50% to 36% in the second quarter. But then if you look forward, it's set to expand by 17 to 20% in the next 4 quarters. I mean, that gap that gap will maintain the premium valuation for tech, won't it, relative to the rest of the market?
Yeah, no, I mean, the thing that like really excites me on tech valuation is that this AI, no, not valuation, tech earnings, is that AI theme is quite independent of the business cycle, of rate cutting cycle, because we know that tech has very strong balance sheet, so they're less dependent on financing. And we know that companies outside technology sector want to get on the AI theme. So AI theme has been the, I mean, it's interesting. It was it was the most frequently mentioned topic in earnings season in this quarter and the previous quarter. So companies outside tech sectors, they pushing money into technology sector. And we know from kind of NVIDIA earnings report saying that the demand is stronger than supply. So there is more demand. And so the kind of earnings in the sector will continue to be strong. We need to be careful about which stocks, which sector, and like how the profit cycle is kind of distributed. But money coming from outside technology into technology, and that's what's driving earnings. It's not business cycle, it's not cutting rates, it's kind of this kind of almost structural shift of money, which will support earnings for next couple of years at least, and then we'll see.
Maria, thanks for joining us this Monday morning. Maria Waitman there of State Street. Coming up on the show, a second assassination attempt on the former President Donald Trump in 2 months. More on the story right here on Bloomberg Brief. Context matters.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The top names in tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, That's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough. Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator. A really important thing to figuring this out is learning how to differentiate between real trends and fake trends. A real trend is something that's actually going to happen and a fake trend is not, or at least not yet. And before you make a big bet on a new platform, you want to make sure it's real. Now, there's an easy trick for this, which I'll share now. Real trends are ones where a new technology platform comes along and the early adopters use it obsessively and tell their friends how much they love it. A fake trend is one where people may buy the product, but don't use it, or at least not enough. So an example of a real trend, I already mentioned the iPhone, I'll mention that again. When the iPhone first came out, many people were dismissive because they only sold 1 million or 2 million that year. And they said, well, this just doesn't matter. But for the people that had an iPhone, they used it for hours every day. It became central to their lives. They loved it. They told their friends, you got to get one. And I think it was obvious then to people paying attention that something had fundamentally shifted. And we had a new computing platform that was going to spawn huge businesses. And it was a good time to bet on mobile apps. A fake trend, or at least a fake trend as of August 2018, I would say is VR. I do believe VR will be big someday, but today most people that I know that own a VR headset use it never or very rarely. And so although a lot of people talk about it, and maybe even a lot of people buy them, there's not the intense usage per user among the early adopters that I think you want to see before you make a big bet. Another thing that startups need, at least one evangelical founder, usually the CEO. Someone at the startup has got to be the person that is going to recruit, sell the product, talk to the press, raise money. And this requires someone who can infect with enthusiasm the whole world about what the company is trying to do. And someone who becomes the chief evangelist for the company, it's very hard to succeed wildly without that. It's very hard to build a team at all without being able to do that.
In the history of presidential elections, one in June with Joe Biden and one last week with Kamala Harris debating Donald Trump. And part of the reason why they moved those up is, as you say, the early voting. Now, in North Carolina and Pennsylvania, we were going to begin to see early voting last week and this week. That will not begin because there's a number of court cases holding up the printing of the ballots in those states. And then once that starts, you have to request a ballot. The ballot gets mailed to you, you mail it back. So it won't be until October that we really get a sense of how much energy is behind this early voting. It's a key metric that the campaigns and we like to look at in terms of, you know, how much excitement is there about this and where are those early votes coming from. But early voting after the pandemic of 2020 is certainly going to be a factor in this race.
If you just look back at 2020, I was just looking at the US Census Bureau, they said 69% of voters nationwide cast their ballot non-traditionally by mail or before election day. So it shouldn't be underestimated in terms of a turnout. Let's talk about the polls. You've got the registered poll and the likely voter poll. They're showing two different things at the moment in terms of the lead for Harris. What's the latest that you've got?
Well, you know, all the polls that were taken before the debate, we kind of have to, we're in a mode where, you know, we have to take it one event at a time. And of course, we don't have any polling after this assassination attempt yesterday. But since the debate, I see 6 national polls. 5 of them show Kamala Harris, the vice president, with a lead of 4 or 5 points. In the national polls, there's one outlier that has Trump leading in those. Now, we're at a stage of the race where you have to look at the swing state polls, and the national polls can give you kind of a sense of the direction of travel. But the fact of the matter is, with the Electoral College, a Democrat has to overperform in that national number by a good 4 or 5 points. So what that tells you is that in the swing states, this is really on a knife's edge. The vice president is leading in many of those blue wall states, Michigan, Wisconsin. It's pretty much a dead tie in Pennsylvania, in North Carolina, and then Arizona and Georgia are leaning towards President Trump. This is still a very, very, very close race.
Greg, we really appreciate your time this morning. Thank you for that. Bloomberg's Greg Corti, and you can follow Greg's coverage and the coverage from the team on U.S. elections. Bloomberg Terminal, the place to go is ElectGo. Okay, concerns are rising in the U.S. and U.K. over Russia sharing secret information and technology with Iran in exchange for ballistic missiles. The Kremlin has increased its cooperation with Iran over its ambition to obtain atomic weapons in recent months, that according to Western officials. Joining us for more is Bloomberg senior editor Bobby Ghosh. Bobby, good to see you this morning. Thank you for joining us. This is something you've called a nightmare scenario for both the Middle East and the wider region. What is the implication of this?
Well, we've known for a while that Iran has a nuclear program. There are three elements, really, that add up to a nightmare scenario. First is having enough nuclear material. Now, the IAEA, which is the United Nations' nuclear watchdog, has said for a couple of years now, Iran has enough nuclear material, uranium, to build several nuclear bombs. The second element is enrichment of that material towards bomb grade. And we heard only a couple of months ago from Secretary of State Blinken that Iran was 2 weeks away from reaching what is called breakout capacity, having enough material enriched to the level that is required for a nuclear weapon. The third piece, and this is the crucial piece, is having weapons technology, which is different from enrichment. That is something that the Iranians had been lagging. Now, we know Russia has previously tried to share that technology with Iran, going back 20-some years. It was caught out in a secret program back in 2002, 2003, and then it stopped. But it now looks like Russia, we are hearing officials on both sides of the Atlantic saying that Russia is now exchanging that weapons technology with Iran in exchange, in return for all the help that Iran has been giving in Russia's war in Ukraine. The Iranian drones, and more recently we've heard of Iranian missiles being shipped to Russia for use in it. Now, if the Iranians get both the material and the capacity to make a bomb, that is a game changer for the Middle East, all of its Arab neighbors, and let's not forget some of the most important trade routes in the world on both sides of the Arabian Peninsula, the Red Sea and the Persian Gulf. All of that comes under enormous, it's already, as we know, very, very unstable. The Houthis have fired off again missiles. They've been shooting at ships in the Red Sea. These are people who are attached to the Iranian regime. If Iran gets nuclear weapons, it becomes basically completely disruptive to all of that region and to the larger world economy.
Well, Antony Blinken and David Lammy of the UK have said Iran's nuclear program has never been more advanced. You mentioned the Houthi rebels there and the destabilizing force at sea, but they've also raised the risk spectrum by launching a missile directly into Israel. Now, that's been down, but this is a pretty close call, isn't it?
Very close. It came very close to Tel Aviv. All of Israel's vaunted anti-missile sort of batteries, as well as the Iron Dome, seems to not have worked on this instance. On previous occasions when the Houthis have fired missiles, it's a 2,000-mile distance, so you can see it coming. On previous occasions, the Israelis have been able to anticipate and block and destroy these missiles before they did damage. This time, something got through. Now, the Houthis are claiming, apparently, that this is a hypersonic missile, which is a level of capacity that they have never previously shown. We know the Iranians use the Houthis as a kind of test bed for their more and more advanced technologies. We know the Iranians have claimed that they have hypersonic missile capability. If indeed this is an Iranian hypersonic missile fired from Yemen in the direction of Israel, that raises the bar in terms of the Houthi threat on Israel.
Well, it's this constant thing of, in the fog of war, there are mistakes, and that leads to larger conflicts.
Yeah.
So what is Israel's position in this as they look at Iran sharing technology with Russia, Houthis, targeting Israel more, and then you have a populace that's calling for a ceasefire? Where does Israel stand?
Well, it is an incredibly difficult set of decisions that Israel has to make. With the Houthis, the last time they fired a barrage of missiles against the Israelis, Israel then launched attacks on Houthi territory in Yemen directly, did quite a lot of damage, but clearly not enough to restrain the Houthis. So there is as you say, the risk of sort of escalation with with each time the Houthis fire a missile, the Israelis attack again, and then it goes up and up and up. Everything seems to be predicated on Israel's ability to reach a ceasefire deal with Hamas. If there is a deal, the theory goes that that then is an incentive for Iran and its proxies, including the Houthis and Hezbollah, to back off at least a little bit. For how long, it's impossible to know.
Okay, Bobby, thank you so much. Bobby Ghosh on the very latest in the Middle East. It's Bloomberg Brief. Context matters. Good morning from New York.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take two numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Good morning on this Monday. Let's get you set up for the trading weekend. It is all about central banks. The Fed will announce its rate decision on Wednesday. That's followed by a press conference from Chair Powell. Then the Bank of England decision comes on Thursday with earnings from FedEx hitting the same day too. And then we're going to round out the week, Manus, with the BOJ. That decision comes on Friday.
Oh, toxic combo, Fed and BOJ all in 1 week. I've got some stocks for you outside the Mag 7. We got Intel bid by 2.7% this morning, qualifying for a $3.5 billion military chip deal. That's going to be good news to Pat Gelsinger. Alcoa is up 1.4% there. You've got a $1.1 billion stake position taken by a Saudi aluminium company there, Saudi aluminium plant, and DJT, which is of course Donald Trump's social media startup extending its gains. Trump says he's not going to sell his stake in that company when the lockup period ends, Danny, but it's down to dollar-yen and 25 or 50 basis points. I hope we can move on aggressively from Wednesday.
Well, for those that were happy about dollar-yen dipping below 140, bad news for you. It's back above 140. Still strength in the yen this morning. About 48% odds that they move by 50 basis points in this market. For that, we'll have to wait for Monday. Wednesday.
what legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you.
Our developers can start building today with GPT-4o and making amazing AI applications, deploying them at scale. 4o is available at 2x faster, 50% cheaper, and 5 times higher rate limits compared to GPT-4 Turbo. But, you know, as we bring these technologies into the world, it's quite challenging to figure out how to do so in a way that's both useful and also safe. And GPT-4o presents new challenges for us when it comes to safety because we're dealing with real-time audio, real-time vision. And our team has been hard at work figuring out how to build in mitigations against misuse. We continue to work with different stakeholders out there from government, media, entertainment, all industries, red teamers, civil society, to figure out how to best bring these technologies into the world. So over the next few weeks, we'll continue our iterative deployment to bring out all the capabilities to you. But today, I want to show you all these capabilities. So we'll do some live demos. I will bring on 2 of our research leads, Mark Chen and Barrett Zoff.
Hi, I'm Barrett. Hey, I'm Mark. So one of the key capabilities we're really excited to share with you today is real-time conversational speech. Let's just get a demo fired up. So I'm taking out a phone. If you are wondering about this wire, it's so we have consistent internet. And if you see, there's this little icon on the bottom right of the ChatGPT app, and this will open up GPT-4o's audio capabilities. Hey, ChatGPT, I'm Mark. How are you?
Oh, Mark. I'm doing great. Thanks for asking. How about you?
Hey, so I'm on stage right now. I'm doing a live demo, and frankly, I'm feeling a little bit nervous. Can you help me calm my nerves a little bit?
Oh, you're doing a live demo right now? That's awesome. Just take a deep breath. And remember, you're the expert here.
I like that suggestion. Let me try a couple deep breaths. Can you give me feedback on my breaths? Okay, here I go.
Whoa, slow a bit there. Mark, you're not a vacuum cleaner. Breathe in for a count of 4.
Okay, let me try again. So I'm gonna breathe in deeply. And then
out. For 4, and then exhale slowly.
Okay, I'll try again. Breathing in and breathe out.
That's it. How do you feel?
I feel a lot better. Thank you so much.
So Mark, you've been working on these capabilities for a while now. Can you tell us a bit how it's different from voice mode?
Right. So if you've used our voice mode experience before, you'll notice a couple key differences. First, you can now interrupt the model. You don't have to wait for it to finish your turn before you can start speaking, and you can just butt in whenever you want. Second, the model is real-time responsiveness. So that means that you don't have this awkward 2 to 3 second lag before you wait for the model to give a response. And finally, the model picks up on emotion, right? When I was breathing super hard there, it could tell, and it knew, hey, you might want to calm down a little bit. You're kind of running a little bit too fast. So, it really has that capability across the board to perceive your emotion. Not only that, though, the model is able to generate voice in a variety of different emotive styles. And it really has a wide dynamic range. So I'm going to fire up another demo for that. Yeah. Hey, ChatGPT, how are you doing?
I'm doing fantastic. Thanks for asking. How about you?
Pretty good.
What's up?
So my friend Barrett here, he's been having trouble sleeping lately. And I want you to tell him a bedtime story about robots and love.
Oh, a bedtime story about robots and love? I got you covered. Gather round, Barrett. Once upon a time, in a world not too different from ours, there was a robot named Byte. Byte was a curious robot, always exploring.
Started this story, but I want a little bit more emotion in your voice, a little bit more drama.
Got it. Let's add some drama. Once upon a time, in a world not too different from ours, there was a robot named Byte.
No, ChatGPT. I really want maximal emotion, like maximal expressiveness, much more than you were doing before.
Understood. Let's amplify the drama. Once upon a time, in a world not too different from ours, there was a robot.
Whereas the Societe Generale rose to the most going back to 2016. Talk about a whipsaw in positioning. We saw the short positioning just completely dominant, and all of a sudden now long overwhelmingly, which raises the prospect of potential dollar weakness heading into the election, heading into the rate cuts, as well as just versus some of these other currencies that have been underbid.
Dollar yen, 140.13. Coming up this hour, we'll catch up with Rob Casey of Signum Global Advisors following a second assassination attempt on former President Donald Trump. Laurie Calvasina of RBC Capital Markets after stocks posted their strongest week of the year, and Neela Richardson of ADP ahead of the Fed's big decision later this week. We begin with our top story. Former President Donald Trump is safe after what the FBI is calling an apparent assassination attempt. Secret Service opening fire at a man with an assault rifle at Trump's golf course in West Palm Beach, Florida, just yesterday. The incident marking the second attempt on the Republican presidential candidate's life in only 2 months. Jack Fitzpatrick of Bloomberg Government joins us now for more. Good morning, Jack. What is the latest this morning?
Well, first, the basics. A number of statements from congressional leaders, President Biden, Vice President Harris, saying political violence is wrong. At the very least, there are the expected statements on that front. After that, there's plenty of work to do and confusion at this point. There's plenty of scrutiny on the Secret Service because of the July assassination attempt on former President Trump, and that will only be ramped up. There's a bipartisan task force in Congress that was created to investigate what happened in July. They have called for further investigations into this event. The bill to give a budget to the Secret Service had already been delayed a bit as senators looked into if they need more resources for the Secret Service or if it's just a matter of oversight and accountability. This will likely complicate the efforts to determine if they need more resources or if something just needs to change organizationally at the Secret Service. And of course, there's the question of how this affects the campaign, which is very unpredictable. Looking back to July, it was only 8 days later, despite the spotlight on the assassination attempt in July, 8 days later that President Biden said he would no longer be the nominee. So it's difficult to predict exactly what we'll even be talking about a week or so from now on a very chaotic campaign trail. But there is work to be done in terms of scrutinizing the Secret Service on Capitol Hill in particular.
Right, and they created that bipartisan task force after the first assassination attempt on the former president. What can we expect from that House task force now, Jack?
Well, first, the Secret Service director at the time stepped down, so we are past the point of simple accountability and a change of leadership. As I mentioned, there are questions about if the Secret Service needs more resources in the short term, more money, more people on the ground. They said to senators in a letter just last week that the issues in July, their failures in July, were not because of a shortage of resources. So again, there's going to be a short-term and long-term look at what needs to change at the Secret Service. But the question of if there was some shortage of their ability to get people on the ground was answered with a no. There's going to be a lot of scrutiny on Capitol Hill and demands for answers, but this is an agency that initially, just last week, had said they have enough resources to do their job.
Hey, Jack, appreciate the update. Thank you, sir. Jack Fitzpatrick there of Bloomberg. Any more details when we get them, we'll bring them to you. Let's continue this conversation with Rob Casey of Signum Global Advisors. Rob, good morning to you, sir.
Morning.
Another almost tragic event over the weekend. Two very lucky escapes over the last 2 months for the former president. What does this change? Does this change anything at all?
You know, I don't think it changes a whole lot, certainly not as much as the first assassination attempt where we saw, photo after photo of Donald Trump bleeding, standing, raising his fist. This, a little bit less interesting to the general public, but I think it points to the fact that the October surprise this year very well could be an example of political violence.
When you look at the timeline to November 5th, does Trump need to change how he campaigns now?
I don't think he needs to change how he campaigns. Now, maybe we'll see him play a little bit less golf, but probably not. I mean, as the sitting president, he liked to travel to his golf courses. As a candidate, he's certainly done the same thing. Now, how he campaigns, I think this really only plays to his advantage. Now, obviously, we're all very grateful that he's safe, but up until that point where he's not safe, I think this riles up his base and ensures that Republicans will turn out in November.
Jack was just talking about what's going on with this task force. They're still investigating what happened 2 months ago. How quickly can Congress move and potentially beefing up his protection? We heard from the Palm Beach County Sheriff yesterday saying if it was the sitting president, potentially there would be a bigger perimeter around the West Palm Beach golf course.
Yeah, unfortunately or fortunately, it's not really up to Congress how good Trump's protection is, right? It's a question of Secret Service. President Joe Biden, Vice President Kamala Harris have assured us over the weekend that Trump's protection is good, right? It's as much as a candidate needs to have. But that being said, I wouldn't be surprised if they beefed it up pretty close to essentially what the sitting president receives. Now, Donald Trump is not the sitting president, but he's 6 weeks away from potentially being reelected. So I would not be surprised if President Biden, frankly came out and said, we're going to give Donald Trump more.
Rob, you said something that I want to pick up on. You said that the October surprise that we may see could be an act of political violence. What makes you say that?
Well, of course, we've seen 2 attempts on former President Donald Trump's life. So that's the first. The second is, our country is horribly divided. And I think to a certain extent, politicians are playing into that and will play into that between now and November. I think the example sort of coming from the other side is Trump and vice presidential candidate J.D. Vance, talking about these illegal immigrants in Ohio, Haitians eating dogs and cats, things of that nature. They're actually legal immigrants. But it's rhetoric like that I think, frankly, could incite this kind of lone wolf violence that is so hard to defend against.
So what's your sort of analogy? I mean, has there ever been a time or any other election cycle that you can think of that had this type of risk, or is this a new and heightened risk that requires a very different type of security and a different type of campaigning?
I think it's at least in the modern American era, this is new, right? We haven't seen attempted assassinations like this in my lifetime and in all of our lifetimes. You can go back to probably the Civil War to see when our country was most divided. I don't think we get there, right? And the hope is that the Secret Service is able to protect, obviously, the sitting president, the former President Trump, and Kamala Harris, and they're doing their best. And it's important to say that none of these attempted assassinations have been successful. Now, obviously, the first one was very close and very scary.
Yep.
Second one, not so much.
Let's talk about the Harris campaign. The first time, we had the Biden campaign, and the criticism at the time was that it was a one-dimensional campaign centered around characterizing Trump as an existential threat to democracy. There's a lot of criticism about that in the middle of July. Does the Harris campaign have enough facets to it? Is it a multifaceted campaign that they're not relying on this single issue, that they can back away from talking about this a little bit more?
Yeah, I think they can. The issue with the question of democracy as a campaign issue is that it's, 100% of people are worried about it, but it splits 50-50, right? Republicans are worried about how Democrats are a threat to democracy. Same thing, vice versa. So, did it incite the first attempted assassination against Donald Trump? We're not really sure. Who knows? The motives of that shooter remain unclear. But, as a question of, can the Harris campaign do more? They better, right? Because I'm not sure they're going to win on this single question of democracy. They have to win on abortion. There's more messaging around a middle-class economy and opportunity economy than we saw from Biden, who didn't want to talk about the economy at all. So Harris is doing more. I think she has to do more to win.
Talk to us about how Harris is addressing the U.S. economy, because we all saw that interview going into the weekend. It wasn't impressive. Some very simple questions that weren't really answered. What is the opportunity economy? What are the policies behind it?
You know, I think the policies that she wants to highlight first and foremost are the housing policies. You know, after that, it sort of falls off, right? And I think what's important about these policies, what many of us know, is that not a lot is going to get through Congress. So it's not as though she can promise, you know, huge reforms, huge changes, because if she sits in the seat, if she wins the election, she's very likely going to have a divided Congress. And I would agree, John, that the interview on Friday, not all that impressive. I think it's probably why we haven't seen her do a whole lot of interviews, why we probably won't see her do a whole lot of interviews between now and November. On the one hand, she's a candidate who absolutely turns out the base. On the other hand, maybe that they want to do their best to insulate her and just maintain the momentum that they have, certainly that she won in the debate on Tuesday night.
Just quickly, just to wrap things up, base case for you and the team, what is it? Does it remain the same?
It remains the same, 65% chance Harris win, so we think that's base case. With a divided government, the Senate goes red, the House goes blue, and that really limits what Harris is able to do, at least until the midterms.
Okay, Rob, it's good to see you. Thank you, sir. Appreciate the input. Rob Casey there of Signum Global Advisors. If you are just joining us, equity futures now totally unchanged on the S&P 500. Let's take the opportunity, just a few minutes, to get you an update on stories elsewhere with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Israeli Prime Minister Benjamin Netanyahu is warning the Houthi militant group that it will pay a heavy price after a hypersonic missile landed in central Israel over the weekend. The Iran-backed group fired a missile that evaded interception by Israeli and U.S. forces. No deaths were reported, but it marks a setback for Israel's air defense system. A string of misses from economic data out of China, especially on industrial production. Now, the calls continue to mount for Chinese authorities to increase stimulus if they want to hit their 5% growth target. The PBOC has indicated that there's more, at least monetary easing ahead. Goldman, Citi, and Morgan Stanley are all among the banks that have downgraded their forecast for China this year. Boeing's credit is at risk of being cut to junk by Moody's. On Friday, the ratings agency placed the plane maker on review for a downgrade. Boeing has $45 billion in net debt, and it's been bleeding cash after paring back output following that near-catastrophic Air Alaska incident in January. The Moody's announcement comes as Boeing workers strike further, and that threatens production and cash flow. That's your brief, John.
Hey, Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, betting big on big rate cuts.
As we start to see a little bit more loosening of financial conditions, that's going to be helpful for equities broadly.
That conversation just around the corner. Live from New York City this morning. Good morning.
Could face bigger challenges next.
It was going to keep rain World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
5-day winning streak on the S&P 500, the longest since the middle of August. We closed that 5-day winning streak on Friday. Let's see what we get this morning. This morning we look like this, just about positive on the S&P, the outperformance on the Russell, the small caps. The small caps last week, a gain of 4.36%. Quite a nice week of gains for the small caps in America on the week last week. Under Savannah's this morning, betting big on big rate cuts.
Whether we get 25 or 50, the point is that we're starting on the journey. So as we start to see a little bit more loosening of financial conditions, that's going to be helpful for equities broadly. Assuming we don't have a recession, that we do see a soft landing, you could even see markets slightly higher than that.
So here's the latest this morning. Stocks coming off the back of the best week of the year as investors gear up for the Fed's big decision on Wednesday. The central bank expected to cut rates by at least 25 basis points, with some traders preparing for a larger 50 basis point move. Lori Calvasino of RBC joins us now for more. Lori, I know the house view is 25, and I just wonder if we get that 25, and of course, welcome to the program, by the way. If we do get that 25, how vulnerable certain trades like the small caps actually are?
Hi, John. So thanks for having me. Look, I think it's a great question, and we were watching the small caps just surge on Friday as the renewed optimism about the 50 basis point cut came up as well. And look, I think small caps have a lot going for them, but the reality is that valuations are full and positioning is also full. If you go back a few months ago, they looked underowned, they looked cheap. We're just not there anymore, and now we've got a lot of Fed optimism baked in. So I do think in the short term, at least, if we're just thinking about the week ahead, I do worry a bit that if we get the 25 rather than the 50, which propelled small caps to these great heights on Friday, that there could be a bit of a reversion in the small caps. I think that, we really have sort of more of the fast money crowd sort of driving that trade right now. If you look at recent flows into small cap, they have been all passive driven, and that passive money does tend to be very, very fickle.
You have a nuanced view here, Lori, with respect to not only how much the Fed cuts, but also the economic data behind it that needs to keep this going. There was this feeling that the Fed was on track to cut by 50 basis points without real pain visible in the U.S. economy. How much is any kind of weakening, even if not a recession, sort of a bear case right now for small caps?
So I think the small caps really need the needle to be threaded. And what I mean by that is if you go back and look at past cutting cycles, small caps do really, really well and embark on a longer term outperformance cycle if you get a recession, if you break the economy. It's small cap 101 to say you sell them on the way into a recession, you buy them on the way out. And you tend to see that pivot midway through. But if we don't get that and we get some sort of economy that's still growing, I do think it depends on what kind of growth we get. And if you look at the other side of the equation, we really do need a hot economy, above average GDP for small caps to really keep going if you look at recent trading data since, say, 2015, 2016. And if we're just, I think it comes down, Lisa, what do you mean by soft landing? A soft landing that's looking at like 1.5% type GDP growth, maybe even 2%. I don't think that quite cuts it for small cap. I think you need something more like 2.5% to 3% or better.
When you broaden out beyond small caps, you say you remain neutral on the S&P 500 as we get closer to your year-end target. You talk about sentiment and how it concerns you. Can you explain why investor sentiment right now is a red flag?
Sure, it's a great question, Lisa. And look, I would say if you look at AAII net bullishness, I think that's the best barometer. It's been doing the best job the last couple years at calling short-term inflections in the market. And it's really flirting with danger if you look at where it's been recently. It's been kind of hovering right around that 1 standard deviation mark, poking above it on certain weeks, but not quite on the 4-week average. And that's very similar to what we saw back in July. That's very similar to what we saw back in August of last year. And if you look at CFTC data, which is going to give you more of an institutional look, that data just continues to make new highs, and it's above levels that we were at in early 2018 and early 2020 pre-COVID, and it's well above the highs that we've seen mark the peak in recent years in kind of that post-COVID era. Look, sentiment and positioning are not the only thing that drives stocks, and we certainly can stay overbought for quite some time, but I do think it tells me that we're really not sitting here in a position where we can absorb any kind of bad news easily. So those are charts, frankly, Lisa, that keep me up at night, even though we've had a more constructive view on equities overall.
Lori, do you still see a connection from a Trump win and small caps rallying?
It's a great question, Anne-Marie. So, if we look back to 2023, 2024, we really just haven't seen that linkage, right, where Trump's doing well in the betting markets and small caps are outperforming. We've really seen Trump more closely aligned with large caps, with growth. Things are starting to change there a bit recently, so I would say we'll have to watch the data. One of the things we did mention in our piece this morning is that if the Harris corporate tax increases, raising the rate from 21% to 28% were to go through, I do think that's a negative signal for small cap, because if you go back into the 2016-2017 period, small caps were one of the big beneficiaries of the rate cut. And that's not just to simply say the historical playbook, flips on its head. We have to go back to the why. And what we found back then was that small caps were more direct payers of the headline rate. They had a tougher time managing their taxes lower than large cap companies did. So I think that issue may come up if we end up seeing Harris win and those corporate tax hikes are on the table. Of course, I think that really only happens, in a Democratic sweep scenario, which is not really our base case.
Laura, you've been looking at both these candidates' plans. I saw you at Trump's economic speech here in New York City. What big questions are still missing as you think about and you put these into your models?
So look, I think it's really preliminary for both candidates, right? I think that they've both taken some heat for lack of detail. From my perspective, maybe my expectations are just low all around. I think this is maybe the 5th or 6th presidential election I've covered as a strategist. But I'm really just looking for kernels of where they're leaning, of what their wish lists are, of what their impulses are. So I think, when I look going forward, I think maybe on the tax side, for corporate taxes at least, we have a little bit more clarity on the Harris side. I left the speech confused about exactly what Trump wants to do in terms of further tax cuts, the commentary of linking the 15% rate to domestic production. I don't exactly know how that shakes out in the S&P 500. We have lots and lots of companies that are producing things overseas. So I think it's tough for me to sit here when I'm looking at my earnings model to just bake in a 15% corporate tax rate. I think it's much more complicated than that.
We feel your pain for policy on both sides. Laurie, thank you. Laurie Calvasina of RBC. Laurie saying at the start of the year, this whole conversation was like staring at the sun. It feels like we're staring at the sun. November 7th. Why is November 7th so important? I really do believe there's a chance we look back on September 18th as the relatively easier decision for the Federal Reserve. November 7th is the next Fed meeting after the one this week. On November 7th, they'll have a much better idea of the politics and policy for 2025. Setting policy around that could be quite challenging.
Especially since what is the policy going to be if they have to pass legislation? How can they extrapolate out some of the promised proposals versus what is actually going to come to pass? And then how politically motivated are they accused of being if they move in accordance to what they expect may or may not happen with respect to inflationary or deficit increasing policies in 2025?
They'll have a lot of answers on November 7th, but they will not have them all. To Lisa's point, the composition of Congress and the backroom dealings of when it comes to the tax cuts, trying to get them through. What are they going to allow potentially to just sunset when it comes to the former president's tax cuts? But then you have to look at the White House. And whether or not it's Trump or Harris, the Fed will have a lot more answers on tariffs and whether or not they're going to be used potentially as a carrot and stick approach of former President Donald Trump, or will they be walls up almost immediately, which many people say is very inflationary, and potentially you could see the Fed thinking about hikes.
Adam Poston at the Peterson Institute making that point. He thinks we need to get ahead of this conversation. We'll try and get ahead of this week, a big week ahead. Coming up next, Nina Richardson of ADP saying, don't take disinflation for granted. That conversation just around the corner on the S&P 500, slightly negative on the S&P, but only just. We're basically unchanged on the S&P 500, coming off the back of the best weekly performance of the year so far on the S&P 500. From New York, this is Bloomberg.